The following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.
Good morning, everybody. Welcome to Ninjatrader Live. My name is Jim Cagnina. It is April 1st, 2024. Joining me live from the Long Island, New York, the incomparable Tom Schneider, CMT. Tom, good morning.
Hey, good morning, Jim. How you doing today?
Pretty good, pretty good. How was your weekend?
Weekend was great. We had great weather. It was fairly relaxing. Got to spend a lot of time with friends and family, so that was good. It was great. How about yours?
Yeah, it was terrific. The weather cooperated beautifully. We had friends with young ones hanging out with us, which is always good. Makes me feel young again.
Yeah, for sure. No, that's great. I saw some of the pictures you shared. That was nice. But yeah, 3-day weekend, recharged, ready to come back at it.
Absolutely. We got a lot of stuff going on too this week. We've got, I know Powell is speaking on Wednesday. I think it's Fed Palooza all over again this week. A lot of Fed speakers are going to be running around and a lot of economic releases. And while we're at it, let's see what we're up against today, April 1st, April Fool's Day.
Yes, happy April Fool's Day. Shout out to my sister. Her birthday is today, so happy birthday, Susie. Today, 9:45 in the morning, PMI manufacturing final. That's S&P Global. ISM manufacturing index 15 minutes later, as well as construction spending. So 3 reports kind of top to start the week regarding manufacturing and that aspect of the economy. We have a couple of bill auctions, 3-month, 6-month. That's a usual weekly event. And then Lisa Cook, she's a Federal Reserve governor. She's on the board of governors, speaks at 6:50. So it'll be the next session, start of the next session. I don't know how much she'll say. A lot of times she comes out and she's talking about central bank digital currency or other promotions they have going on. So it might not be that informative, but you never know.
Yeah, I mean, PMI, ISM, construction spending right away on a Monday morning. That's like Ricky Henderson being the leadoff hitter, getting to first base and stealing all the way to third. Big potential start for the week.
Very good. I like how you slipped the baseball reference in. The season has started, so we're excited.
You notice how old my reference is because I'm just not hip. I'm not up to.
Well, I mean, but there's an internet out there that people who don't know who Ricky Henderson is, you can go look it up. It's great.
Yeah. Oh boy. All right. Well, let's start talking about some of these some of the daily charts here. And I still have my this is my Sunday night, Monday morning commitment of traders daily chart, right? So I have a couple things going on for those of you who are new. I have just a daily candle. That's all. This is the E-mini S&P June 2024 contract. And then I have the commercial net positions, think hedgers, commercial net positions highlighted in this dotted blue line. It's kind of zigzagging across the chart. And remember, it's flat lines because it's a weekly number. That's all. It's just these are the data points every week. That's why it flat lines. And at the bottom is open interest, right? These are contracts that haven't been closed yet, right? And it also shows a change in open interest. So we'll take a peek at these in the first couple of minutes here as we go through these daily charts. But right now, this E-mini S&P looks strong, Tom. We have some wicks at the top, but look at it go.
Yeah, and it's kind of following that same pattern of advance, and then maybe pause or even a little bit of a pullback. In this case, we haven't gotten that real a big pullback yet. It really has to advance, continue to advance, and it has. It wicked through the target, was it target wick from about a week ago. Seems to be the pattern. It just hasn't been as strong, and it could be the shortened week. It could be the low volume, but we'll see this week if this advances. That's a pretty bearish look on the candle right there. If you took it as its own, so it just might be another day of kind of be open-minded today.
Yeah, and I think a little bit. Remember, we had that PCE number on Friday, personal consumption expenditures for the previous month, and that came in. It was lukewarm, right? It wasn't super hot, super cold. Didn't really inspire greatness. Just kind of flatlined. And I think overnight on Sunday, we'll take a look at the 10-minute charts in a little bit. Overnight on Sunday, I think we saw an immediate reaction because it's the first time you could participate, really, Sunday night. And then things kind of settled back down. So it was interesting price behavior last night, Tom.
You wonder, Jim, and this isn't conspiratorial at all, but you wonder if knowing what the number is, who puts the PCE out? Is that Bureau of Labor Statistics, something like that, BEA, whatever it is? Um, if they had a volatile number, if they had a number that would incur volatility in the market, do you think they would have put it out on a Friday on a holiday where everybody's, probably not trading?
I'm gonna, I don't know. I mean, I'm gonna go with yes. I mean, I don't think that I think the decision to publish this number was made a long time ago. I don't think it was made like on Wednesday. Let's see what
Sure,
the number
sure.
is.
Right.
So yeah, no, I don't think so. And you have, these folks also have to schedule vacations and stuff like that. And I don't think so. I think it's a legit regular print. Just happens to fall on Good Friday, which maybe isn't a federal holiday.
Right. Right.
So, but in any event, it is what it is. Let's keep moving here. Let's go to NASI. Let's go to Nasdaq next. I'm going to use the classic Nasdaq to look at the commercials on the commitment traders. But I'm not too impressed with what happens with that on the stock index futures because it changes on a dime. It changes on a dime. The commodities I think are going to be more interesting. And remember, I have two axes going here. That's why it looks a little weird. But we're all good, Tom.
Yeah, the interesting, you said this is the hedgers, uh, uh, the commercials, the hedgers. Um, this is indicating maybe a little more hedging is going on than in the E-mini. E-mini, it was dropping off here. It's increasing. Maybe they're a little more bearish on the Nasdaq than the E-mini S&P.
Yeah, right. So good point. So they increase they have less, they've reduced their net short position. Right. Suggesting perhaps they want to, hedge the other direction, which would mean we'd have a break in equity prices. You're right. That's a great observation there. But the open interest hasn't changed. It's kind of flatlined right now. So I don't know. We'll see how it goes. I kind of agree with Mike Burke on this, that the commitment of traders data is a little less important in the equity world because there's so many other factors that move so fast than maybe some of the commodities, the treasuries, the currencies. So,
Sure.
And we'll get to those as well. But we have these same Mohawk wicks, Tom, at the top of this particular candle pattern.
Yeah, this is looking like a gravestone doji. Not to sound ominous, not to sound too negative, but that's a bearish candle right there, very much. Same thing we saw in the E-mini. Sellers came in and knocked this back down to where we opened. And we did dip a little lower, so it's not a perfect gravestone doji, but it's a really, really bearish. Taken in, if you just look at the one candle, looks very bearish.
So it's sellers just pushed this thing all the way back to where we started from, and we started at the bottom of the candle, right? So that's hence the the picture of a gravestone.
Exactly.
Okay. Now, but we're kind of right back into this area. You know, I could draw a rectangle here, area support, which in my mind might be kind of important. Let me just draw that right here as well. So again, a little bit of consolidation, though. I understand that might be a little bit bearish, but I'm also thinking about what happened over the weekend. I think there's a little knee-jerk reaction that's going on here. I think in a regular, if we had a trading session on Friday, we wouldn't have saw that. But that's just me.
Right.
Anyway, I'm open-minded here. We're sideways bound as well, and I'm not ready to declare this bull run over yet. So I'm gonna put my foot down. Let's go to the Russell 2000. Russell 2000 is a really nice trend it's working on here. Let's let this data pull in here a little bit more. Let me open this up. So I'm going to draw a channel, a trend channel here, Tom. I did this on my other charts, which we'll get to in a little bit, but let's go ahead and get this guy going here. You know, this is kind of loosely fitting again, but this is looking pretty positive, I think.
Certainly. Yeah. I mean, this is looking higher lows, higher highs. Trend channel is pointing pretty nicely up. We know that the Russell has been, enjoying the benefits of all this talk about lower rates or when the Fed is going to lower rates. I feel a little more I feel better about being bullish on this market than the other two we just looked at.
Yeah, no, right. And they haven't always been marching to the, the beat of the same drummer for a while now. And so we're a long way away. And I forgot who pointed this out last week, but a long way away from making all-time highs in the Russell where we've been doing it in the other stock index futures.
Right.
Speaking of the Fed, though, you open the door. Let's get it up. Let's get the Fed. How much time's left? 30 days left, Tom. Let me refresh.
Yeah, it's been about 2 weeks since we saw the last announcement, which was, of course, we know unchanged. And it's looking like unchanged again in May, 92%. We'd have to have a really horrible print or something pretty dramatic happen to change that. I don't think that'll change too much in the next 4 weeks, except for it might go up. That June number too is for the first rate cut has been hanging around 60. So, again, that's another 6 weeks after. That's in 2.5 months. A lot can happen, but 60% 2.5 months out. I just want to see that number build a little bit, right? Incrementally build every week. Maybe it gets up to 62, 63, 64. But I think the advances will come on those days like where the PCE comes out or CPI or something like that.
Yeah, and it's funny because someone was on Bloomberg this morning talking about, well, 3 rate cuts are baked in the cake for this calendar year, and I laughed. No, they're not.
No, you look the third cut. According to this matrix, that we see here, the third cut would come at the December meeting.
Yeah,
anything can put that out of whack. It's too early to say baked in the cake for sure.
Yeah, and look at this guy way over here, 0.4%. What's going on there? Cross that one off.
That's right. That's right.
Oh, Tom. So, Tom, we have a special announcement today, don't we? We have a kind of a fun contest for everybody.
Right. We're experimenting with some new things this year, and one of those is having a more interactive. Let you, the viewer, participate in the show, and one of those ways is the Guess the Close contest. So the Guess the Close contest is where you, the viewer, can send in your guess for how the market for the E-mini S&P as a June contract, I believe, will close on Thursday. We're using the 415 settlement price. And how can you do that, Jim?
You send an email. This is easy. You send an email to learn@ninjatrader.com. Learn@ninjatrader.com. Now that email has to be in our inbox by midnight tomorrow night. and then we'll tabulate everyone's guesses, and we'll see who gets closest to the pin.
Yeah, and if you could in the subject line of the email, just put in guess the close, and you can even put in your guess in the subject line as well. If you do put, for some reason, if you put in multiple guesses, the first one is the one we will take for the contest.
I didn't know that rule. Okay. I got it. So no change in your mind, basically.
I think it's the first one that you guess. You've got today, tomorrow to determine what you think. Well, the E-mini S&P will close on Thursday. That's the June contract, not the index, the June contract. And send that to us at learn@ninjatrader.com with guess the close in the subject line. And if you are in the United States, we will send you a prize package full of good NinjaTrader stuff.
Yeah, I saw the gear. What do they call it? The swag?
The swag, yes.
Yeah. It looks pretty cool. So yeah, so we will send it out to you for sure. And we're gonna strong arm Craig Bewick a little bit to throw in maybe some CME stuff as we go further into the contest.
Very nice. Very nice.
And the other thing is, Tim, I'm guessing. I'm gonna submit a guess, and I'm gonna tell everybody, when do we want? Are you gonna submit a guess?
Yeah, for sure. For sure.
All right. When are we going to disclose our guesses to everybody?
I think tomorrow we'll give us a little time, see how today shakes out. Let's look at what upcoming economic reports are coming out. Whatever tools you have at your disposal. We have charts, we have news. I'm going to use those same things, but I think the closer you get to Thursday is probably your better bet to guessing the close.
Well, yeah, but you have to have it in by Tuesday midnight, right?
Tuesday midnight, right? So
Yeah.
I want to see what happens today, and I want to be into the market tomorrow before we kind of say, yeah, this is what I think the close will be.
Well, you and Kevin are both on fire with respect to your bracket sheets, right? So Kevin definitely needs to submit a close too.
Well, we were on fire. I think dumpster fire is how you describe it now. We
Oh
had
no.
Kevin and I were tracking. We had very similar brackets, just coincidentally, and we were doing. Thursday night we were on top of the world, and then Friday happened, Saturday happened, Sunday happened, and we enjoyed it for about 12 hours. We were feeling good, but things change. It's all good. All good.
Yeah, for sure. All right. There you have it, folks. Let's keep moving here. We got crude oil still at a plus 80 handle right now, 83.25 and climbing. We've consolidated a little bit, Tom, but we keep trying to break out above. And let me show you what I mean by that. I'm going to go ahead and put some rectangles in. Nice area of support right here, approximately 80 and a half, 80.50. And then we finally, last session, did a little damage to the ceiling here, and we're continuing our merry way up.
Yeah, for sure. Slow grind up. That 80 to 83 range really hadn't been tested on the upside, right? We kind of established that 83 as the top range, pulled back down to the support area, and then it wasn't even really a double top. I don't know. Some people think that might be. I like to think of it as just a previous high that's been tested and overtaken. You've got that trend line in, at the top that I think if you maybe bring in more data, we could see, that might be an kind of a nice guide if we think that this market is oscillating up, like I said, slow grind up, might test that resistance level and come back down before it tests it again.
Right. And the commercials are adding to their short positions, right? Expecting this market to, protecting themselves against this market going higher and higher. And that's the smart money, according to a lot of folks that track commitment of traders. You can see it in this dash blue line here. And not only that, open interest is increasing, which means, my interpretation here is that the hedgers they're not liquidating anything else. They're just adding to their short positions. Bullish.
Yes.
looking for places to buy crude oil. All right, what else do we have? Gold is on the move again too. We talk about gold. There's a lot of stuff going on in gold. Let me drive that guy over there, and we'll pull up a chart, get some data in here. But man, this is the second astronomical breakout that we've had on gold in the last month.
Yeah, and Mike and I were talking last week about gold, getting above that 2200 level. Finally got above it, but it really hasn't come down. It really kind of kept it in its rear view, and 2300 is the next target. Big move up on kind of global inflation risk is kind of waning, right? So I think, they're thinking that there's not only the US, but other central banks are thinking of cutting their rates. And so gold is getting a little bit of a bump because of that.
Yeah. I mean, this is, we had this first drive up, sideways behavior. And during this first drive up, you saw the commercials go from negative 159 to an even bigger negative number, minus 208, with another shelf. Now we're kind of sideways here, status quo. I'm wondering if we're not going to see another dip next week. I mean, this is a pretty big move up here. This is a pretty bullish point of view.
Right. So those hedges will go more negative if it's just from the dynamics of the chart, right?
Yes. Yeah, for sure. So we'll see. I mean, anything could happen, but this does not look like the top is in. I mean, just,
No, not
there's
at all.
no top in sight on gold. So anyway, we'll see how high it could go. The gold bugs are like high-fiving each other. Peter Schiff is dancing in the streets and doing the comparison with Bitcoin. So let's do the same comparison with Bitcoin. There's probably not going to be any commitment to traders data here, but let's see if I can pull it up anyway without causing too much grief. I'm not sure it's gonna. I think that let's see how it goes. Yeah, there we go. We get a chart. We get a chart anyway. Leveling off here around that 70,000 level in Bitcoin time.
Yeah. So, Bitcoin has had a big run this year, as we know. Maybe it's found its level with, this balance of, okay, we've got the news from the SEC and from different areas around the world that are starting to allow these ETFs to use Bitcoin, and maybe that has kind of cooled things for a little bit as that's fallen out, right? We saw the big move up. We saw the retracement as existing Bitcoin trusts had to sell their Bitcoin to fund those people who are pulling out and moving them to ETFs, right? Really interesting effect. And now we're just kind of sideways. I'm open-minded on this market. It's very volatile. And we had a great show with Anthony Crudelli on Thursday on how to trade Bitcoin. He had some interesting comments about what he looks at when trading Bitcoin.
Yeah, and next week, I think on the 8th is the Bitcoin halving, they call it, which is an event that's happened a few times in the past, and it is expected to have an impact on price. I'm not sure. I mean, the last 3 halvings, as Eric Norland told us last week, were pretty impressive within a 12-month period of that halving with respect to appreciation in Bitcoin prices. But he also did say, hey, there was like a 70% drawdown a couple of those times.
Right.
A lot of volatility there. So again, right now I'm open-minded here. I don't necessarily. I think we're sideways here. So I think my bias is going to be a little bit sideways as well until we break up or down. Really nice area of resistance up here around 72,000, and then the last 4 sessions we really we're sticking at about 69,000. So 4 baby candles. We'll see how that goes. Eventually, we're going to get a breakout one way or the other. We just don't know which way.
Yeah, that's a pretty tight trading range for Bitcoin, right? 3,000, which is, almost 5% of what the price is. So it's nothing to, sneeze at, but I'm with you. I'm open-minded today.
All right. Let's get my market analyzer here. Everything's linked up. Let's just scan the field here and see what we got that's interesting.
Maybe 10-year? Take a look at
10-year note. Let's do it. That would be ZN. Where is my ZN? Here it is. 348,000 contracts traded time. That's anemic for Monday. There we go. So I was looking at this earlier, Tom, and the commercials are still positive. I mean, less positive, but they're still positive, which means they're expecting further downward movement, I think, in this particular market. Open interest has just kind of ticked up a little bit. But it looks like like, I don't know, this is like a wave pattern almost.
Yep. Yep. I agree. I mean, this could be the start of a turnaround. We've kind of reached that apex that we couldn't quite get past 111 for the last week. We kind of hit an impasse, and now we might be seeing that turnaround. Um, this has been, kind of wavy, but we talked about the bottom being in for the 10-year, and that was a speculation. That wasn't a declaration. So, could this be a case where we see more downside? It is if we don't get that inflation under control, where it's trending back towards, heading in the right direction. I think every month we don't see inflation heading down is more downside risk for the 10-year.
I'm bearish this week. We, with that 50% stuck, 50% retracement stuck. So we'll see how far down we really, really go. And the low volume day today, folks, everybody still continues from the last week and a half, really 2 weeks. So, well, let's go ahead and take a really quick break, and we will get right back to the opening range.
Awesome.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
All right, we are back, everybody. Getting my charts ready to go. I changed my workbook, really easy to do. My workspace, I have a couple different workspaces set up here. This is the primary one that we use most of the time. It's the one we just saw was the Commitment to Traders workbook, but here we have an E-mini S&P weekly on the upper left, daily on the upper right, 30-minute lower left, and 10-minute on the lower right. Whew.
Nice. By the way, Jim, want to give a special shout out to Raleigh.
All right.
And Cos P, who are the first in the chats. So you two get a special shout out for being the first one. We appreciate you coming in and joining the chat and joining the community. Raleigh and Cos P joined the chat at one of two places, at YouTube. You just join the chat there if you're watching on YouTube, or you can come to ninjatrader.com/events, hit the play button, drop in a handle, and you can ask us questions, comments, give us some trade ideas, or what have you been doing today in your trading? We'll take a look on the charts if you'd like. But thank you, Raleigh. Thank you, Cos P, for being in the chat today.
100%. Appreciate you guys being here, participating in this great community. And we are grateful you're here and we're having fun. Don't forget, type in questions, comments, observations, anything into the chat, and it eventually might make it to me and Tom.
Right.
10-minute chart, Tom. So overnight, this is kind of what I was talking about. I mean, look at that kind of gap up overnight. When I say overnight, remember, it was a long weekend. So Sunday, gapped up, rally, continuation rally. And I think, we got all the way up to, what's the highest? The high was 553.33. And I think this was just speculation thinking that, well, PC was pretty good. And there was no, the bad news over the weekend was less than usual.
Yeah. Yeah. And it held that area pretty well, right? It did come off the highs, but was trading pretty range bound even through European session. Now, Europe, of course, generally takes Easter Monday off, with the exception. Oh no, I think takes it off as well. So, we didn't get a usual change in direction or change in level that we do see when Europe comes in. But the market held kind of the levels that Asia brought it up to, and then you start to see that fall off. And that was what? That was R2? Did it get to? Or is it that's R2. Right. So R3 is up there.
It's hidden. Yeah. Point of control,
right
R2,
there.
pretty close to the same thing. Yeah, there it is.
So R2 held pretty nicely as resistance. It was trading around it a little bit, but kind of became the ceiling as time went on. And then, pre-market US participants push this down a little bit, push it below VWAP, and we are trending downward since. R1 didn't help too much, although when I say help as support, it did act as resistance once we tested again. Now we're down at the pivot itself. So these pivots can be a guide even in lower volume trading days.
Yeah, and the gap here, Tom, I know gaps don't always get filled, but I'm just wondering, this is the gap that's left. That's the gap that's left. Low volume day, maybe not a lot of institutional participation yet. I'm wondering if we're not going to close that gap this morning.
Yeah, we just saw regular trading hours just started. Volume is starting to pick up. Look at that. The volume of this candle is already at the halfway point of the previous candle, and it's not even 20 seconds in. So volume's going to move this down, and we might see a big jump down on the VWAP as well. As that, like I said, the volume comes in and everything changes.
Yeah, speaking of VWAP, that's a great point. I mean, we lost VWAP in the rear view mirror at 710 to 720 candle. And price has just been separating further and further and further from it. That's volume weighted average price. That's the purple line that I have right there. And not only that, we're trading nicely between this first and second standard deviation band of the VWAP for most of that time.
Yeah.
So I'm expecting this gap to get filled today. After that, all bets are off. I don't know in my mind.
Right. And it may fill that gap while we're speaking. This is not a wide trading range day yet. So even though it looks like a big drop off, the range is 20 handles. It's nothing on the E-mini S&P when we talk about average true range is about 45.
Yeah, and the point of control, the last session's point of control, 53.10, give or take a tick, is we have the suspicious volume node competing point of control today at the same level. So when I say suspicious, we'll see if it continues to get volume or not. But it looks like it's trying to accumulate some serious volume down here. Let's see if the pivot holds too. That's another important. I'm going to change it from daily pivots to Mike Burke pivots.
Now, what are you explain the Mike Burke pivots? I want to hear.
He loves the pivots.
Okay.
He's just got the passion for the pivots, which you do too. I know. And I guess by default now I have to. But it's holding support. I mean, there's a nice area of support right here. I would even draw a more permanent rectangle. We'll see if if that holds or not, right? See if my gap theory is off or not. I don't know. Let's kind of roam around the cabin here a little bit, Tom, while we got the time. Let's see. The Dow let's go to the Dow, Tom. The Dow is minus 57. It's not a huge amount, but it might be leading the pack here from a systematic, retracement point of view. Similar gap is in place here. No gap on this guy. Again, they got that big green candle at the open last night. And then similar VWAP Yeah, about the same time we lost VWAP, 710 to 720 bar. And it's shooting straight down, Tom, toward the previous session's lows.
Yeah, it's looking, very similar. R2 or I'm sorry, not R2. The pivot itself has kind of been breached a little bit more. This is looking a little bit more bearish, I would say, than the E-mini S&P. Um, you've got yesterday's low or Thursday's low in view, right? That's right, bottom of the screen. You've got those inverted trees, triangles. That's fairly bearish if we're taking out Thursday's low this early in the session when the other, E-mini S&P isn't near it. But you're right. Looking very similar in terms of what the dynamic was. A big push up. Europe isn't in to push this market around, so it kind of hung out at Asian levels, Asian market levels, and then, like you said, it lost VWAP and now trying to get back above it. But as we trade down here, it might VWAP might get pulled to the market too.
Yeah, that's our target, Tom. I feel pretty bearish right now. Right. We do have that 945 number though, so
Yeah.
be careful with that. That's going to be out any moment. Is it already out? No, we got 10 more minutes. 10 more minutes for that. Tom, we have a pretty awesome group of people here today.
We do. We've got Yovan, Paulie H, John M, Stephen Rios is here. Mom and Dad Kags, good morning. Robert W is here. Chadro, that might be a new name. Welcome. Turtle is here. Theo G, Jen P, Eagle, For Money is back. Howard N, Michael H, R. Crawford, Rin Waters, that might be a new name. We might have seen that before. Anissa, good afternoon. Boston J, JKW Ray, Hitta D. Franklin, Nola Boy, Sergio BV, Tony Lyons, Manuel B, Moisty D, Eric H, Lewis H, John Smith 2005, Mac Rangers is here, as is Howard Nichols. Calvin J is here as well.
Wow. Great group of people, folks. Thanks for joining us here this morning. Ninjatrader Live. Greatly appreciate it.
Howard Nichols has a question, Jim, about your commitment to traders. It says, I really like the plot of open interest on your charts. How can I get that indicator for my charts?
Easy peasy, Howard. Just right click on your chart. Oopsie, hang on. I got to get my cursor going here. Right click, go to indicators, and you'll get the indicator list, the pop-up window here, the menu. And on the left-hand side, upper left-hand side, you should see COT, commitment of traders. And you double click on COT, commitment of traders, highlight that in the configure section. And then in the top, you could choose it, right? In the top, you could choose it, number of plots, and I'll just show you all of them real quickly. 5. So the fourth one, COT4, it's called, is open interest, right? And so if you add just 4, which is fine, that's what I did. I added 4, but I made the lines for the non-commercial and the non-reportable invisible, and I put them on two different panels. But that's how you do it. It's COT4, open interest, and then at the bottom here, you could go ahead and format the color and the plot type or style, I guess you call it. It's easy peasy. So just look for COT, commitment of traders, abbreviated. Here we are, Tom. We're hitting that S1 on the Dow. We just hit it.
Yeah, and this early in the day, one test of S1 doesn't make a support level, right? So fairly bearish movement here at the open, lower lows, lower highs. I'm not looking for a place to buy just yet. And again, we've said this before, multiple evidence is necessary, I think, to find support. We don't have that yet.
Oh, not even close. I'm with you on that. I mean, I see S2 in our future.
Yeah, this might be one of those times for a breakout trade, right? But again, you could be selling the low, which at the open, I don't like.
Well, I especially going with that 945 number that possibly could whipsaw everybody out. So let's just take a peek at a daily really quickly, just to refresh our memory here to see where these areas of support and resistance are. And as Tom pointed out earlier, this is pretty bearish candle that we have cooking right here. We have some room to go though. A couple, on the 26th, the Continental Divide, the midpoint of that benchmark candle is close to 969, 970. So there's another 100 points potential to hit that level. I don't know if that's going to be important or not, but it's just the first observation that comes to my mind.
I also see, Jim, that 8-period moving average and really the 21 that you have up there. They act as nice support levels, right? It tracks the 8 pretty well. And then when it fails the 8, 21 seems to catch it pretty nicely. So we've got a little bit of room to go, I think, on this downtrend possibly.
Yeah, no, I agree. All right, let's shoot over to the E-mini S&P though, because I just want to see if it filled that gap yet, Tom. I think it's going to. Let's just double check. No, look at that. E-mini S&P is making a comeback.
That's right. That, that VWAP being pulled down so much, it makes it easier to try and hit that VWAP, right? Because there's so much volume on this candle, that first opening range candle. Yeah, we could track, VWAPs in play here.
Yeah, but so is R1. I mean, so R1's held really nicely. We'll just draw a rectangle right there really quickly, just to kind of show you what I'm talking about. Is a nice area, and it's just what his name is, resistance, right? Right here at 53.16. So that's pretty compelling right there. We'll see if we break up or above it. Now we are trading above that first standard deviation band for the first candle. We closed above it forever, like all morning.
Right. Since we made the move down below VWAP, really. I mean, we didn't cross below that first standard deviation pretty quickly as well, and haven't really tested it till now. R1, does it hold, or is VWAP the key here? And when we're talking about the institutions coming in and we're talking about VWAP, that's a little more important to them than to us, right? We use it as a guide, they use it as a payday, right? That's how they get measured for their metrics. So there's something to be said for watching VWAP, especially when the market gets really close to it, right? You might see this phenomenon where, market wants to go long, but there's a hesitation right around VWAP because, well, the traders don't want to buy above VWAP; they want to buy below VWAP. So sometimes that has a normalizing or like a mediating effect. It doesn't always stay that way, of course. We know it can cross above anytime, but
yeah, no, I agree. And, these areas of interest contain hidden orders, right? There's limit orders there. There's people that have stop losses there. There's people that are entering on stop losses there. And so the more areas of interest, in my opinion, the better. But that's certainly one of them. I'm just going to draw the retracement high to low. We hit that 37.5 almost perfectly, right? We haven't closed above it yet. And the 62.5 is pretty far up. It's above previous session's highs here. So, this could be an Anthony Drager case, right? Everyone's short. Okay, now I'm a buyer. I want to get out, pushing it back up. Now everyone's flat. Maybe it's time to get short again. At this point in time, I would be looking after this number. Well, actually after 10 o'clock to see what the resumption of trend potential is here on the downside. Oh boy, what a morning. We got to go to gold, Tom. Gold is just up $33.
Yeah, pretty amazing. Saw that big move. I mean, it was almost at the jump, right? It was up from Thursday, right?
Yeah.
Big finish at the end of the day, end of the session, and just continued over after a 3-day weekend. It pretty much just continued.
Yeah.
I was up 50 handles at some point, I think.
Crazy. Oh yeah. Look at that. And we didn't get to R2, but we made a lot of progress on the upside. 22.85, 86 half, I'm sorry, was the high right there. So I don't know. I mean, we volume weighted average price, we've been kind of toying with the last several bars. trading below it right now, but we haven't really had any meaningful traction below the first standard deviation band on the downside.
Yeah. Yeah. And that sometimes happens, right? When you're so extended on the top side that a move down, a breakdown doesn't extend to the second standard deviation, right? You're up at the second standard deviation band. When you start to cross below those deviation bands into the VWAP, into the first, sometimes it just stops at the first and turns around, right? Unless of course there's velocity for a big event. You know, generally we see 3 standard deviation bands seems to be a range, meaning 2 to the top, 1 to the bottom, or 2 to the bottom, 1 to the top, something like that.
Yeah, right. But but Tom, also on that note, we have a lot of volume. We have 120,000 contracts traded for gold already. That's pretty good for this contract so far today. So there's a lot of folks that are interested in trading this contract right now. And not only that, I mean, remember, this is 100 troy ounces, this one contract. So one contract, the notional value of your buying power there is about $227,000. So it's a big contract. You could trade it in a micro contract, which is 1/10 the size. Still a lot of notional value there. That would be $22,700 of notional value. So don't discard the micros.
Yeah, and volume Friday saw above average volume, you know, going into the weekend, going into a 3-day weekend, I should say, holiday weekend. And we're about half of Thursday's volume right now. And we still have all, you know, pretty much 6 hours plus, 7 hours plus to go. So this might be another above average volume day.
Yeah, and sellers are taking over right now. I can't help but kind of put my eye on this benchmark candle here that we had earlier this morning. And it's the biggest candle on the board pretty much. And I know we had some big green rallies up here, but it took several 10-minute increments to get there, hour and a half. Here in one candle, we had a big sell-off here. We broke through VWAP, stayed below it for a lot of the time. And so with that in mind, I'm wondering if, we're not going to get some kind of retracement to the downside here.
Yeah, and it goes back to what you said about Draeger, right? What he says. We had a big run up, start of the session, got a lot of buyers coming in, and eventually that broke, right? Eventually just, trade sideways, and somebody said, oh, let's start to sell, brought it back to below VWAP, and that might just be what drove it down to that first standard deviation band. All those people who bought earlier in the session might be trying to take profits or not lose, not turning a winning trade into a losing trade.
Yeah, absolutely. I'm going to draw a rectangle here, Tom. Just to kind of, for further notice, right? We had a few wicks that dangled down into this area right here. So the area support starting around 65.30, which is in that first standard deviation, second standard deviation on the downside band. So we'll see if we could break through this or not, or if it's truly going to be a support. We only have 30 minutes worth of data there, right? Pre-market, but it's still worthy of a rectangle, in my opinion.
Yeah. And notice that was, I think, right around the US Open, right? The traditional US Open for gold. So,
yeah.
Something about that level, market participants don't want it to go lower. We'll see if it tests it again. Might be an interesting entry point.
Yeah, for sure. For sure. So anyway, we'll see. We're gonna wait for that. Actually, that number might be out. Let's see if we have it. We do. S&P manufacturing final is in, and it came in at PMI came in at 51.9. Forecast was 52.5. Previous was 52.5. So it came in above that 50 level, Tom, but it missed expectations by a little bit. I mean, I don't know if 0.6 is material or not.
Yeah, I don't know if it's going to move any of the policymakers to change their idea about interest rates or whatnot. Yeah, it seems to me like a miss, but it's also we get two more pieces of the puzzle at 10 o'clock
Yep.
with regards to manufacturing. So it might be also just let's wait for those two before we decide if this economy is moving in the right direction or needs a little help. Um, we'll find out at 10 with the two other reports coming out. What is that? ISM
Yep. And
and
construction spending.
construction spending, right? So
Yeah. And last Friday, while we were all, had an off day, consumer spending came in hot. Month over month, it came in at 0.8. Forecast was only 0.5 and previous was 0.2. So, consumer being me and you are continuing to spend happily.
right.
As the economy does what the economy's doing. So that's another piece of the puzzle. So we'll see what happens here with the next two, the 10 o'clock ISM and construction spending. By the way, Tom, the other thing I noticed was last Friday, because of that PCE number, Atlanta Fed updated their GDP estimate, GDP now estimate. I'm going to call it that still, even though they don't call it that anymore. GDP now estimate to 2.3%.
And that's for the first quarter, correct?
Yes.
Or is that for no? Yeah, right, because it was the end of the first quarter. Correct.
Yeah.
Okay.
And then the New York Fed also did one. He has a nowcast, and theirs is saying the same thing as of March 29th, but their number was 1.87
Okay.
GDP. So, hanging in there. Still, a 1.87 isn't a huge number for GDP.
Right. By
It's
the way,
been a
Jim,
while.
we should probably mention the new contest again.
Oh, that's right. For those of you who just joined us, and for those of you who haven't just joined us, guess the close. Guess the close game starts now, right?
Right. You can go ahead and send an email to learn@ninjatrader.com. And the question is where will the E-mini S&P contract, June contract, close on Thursday this week? 4:15 settlement. What will that price be? And if you guess that correctly, or the closest one to it, you'll get a prize package of Ninjatrader swag. You must be residing in the United States to take possession of that. We take those guesses by the email, anything received before midnight Pacific time tomorrow. So Tuesday night, midnight Pacific time. We'll take your emails, limit one email per customer. If you send in a multiple, we'll take the first one that comes in.
Well, I thought, wait a second here. Only send one email in. Don't send more than one. And
Right.
don't
But
do don't do the, Tom1 at yahoo.com, Tom2 at yahoo.com, Tom3 at yahoo.com.
right. But we will take those up until midnight tomorrow night, Pacific time, and then we will see where the E-mini S&P closes on Thursday.
Yeah, it'll be a lot of fun, folks, for sure. I'm guessing for sure. I'll let you guys know once I do my guess what it was, and we'll see how good I am or bad I am. It'll be fun.
Yeah, we'll do that on Wednesday, Jim. We'll do that on Wednesday morning.
And the gear is pretty cool. The swag.
Yeah.
Yeah.
I've seen it. I've seen pictures.
Yeah.
Only pictures though. Haven't seen them live, and they're all at the Chicago headquarters, and we're outside of there. So
yeah. Anyway, by the way, Mike M, Legion R, Martin L joined the chat. Appreciate you guys. We don't see it in real time, but if we miss your name, we apologize. We really appreciate everybody being here today with us at Ninjatrader Live as we're watching this opening range. Things are kind of slowing down a little bit here in the mini S&P. From a volume point of view, we have 263,000 traded so far. Again, anemic, slow volume day. The NASI has way more than that, almost 400,000. Again, not a lot of institutional participation in my humble opinion right now, but still a little green on the board. 4.5, little green, on the E-mini S&P, tracking above that 5,300 level, which is astounding some people.
Yeah, I'm 5,300 this early in the year seems, we've heard 5,500 by the end of the year. That seems within reach. That seems reasonable. It's only 200 handles. But today, we looked at that daily, we saw a doji forming, right? That to me is open-minded. That's range bound, if you will. When I see a doji, I think it could be that we just trade sideways, right? And so now we look at the intraday charts and we see that, yeah, exactly. There's the doji at the top, right? Today's candle.
Oops. Sorry, wait a second. I lost it. I made my, there we go. Easy with my stretching out the axis here. Yeah, there it is. Well, it's back to back, right?
Right. And it, makes sense around a 3-day weekend, less participants. Now it's not looking as much as a doji. There is a little bit of a red body happening there, but the essence is sideways activity during the day, during the intraday charts. And so the question is, do we, where is that range? Where is that range? And I think we were seeing it on the intraday chart, kind of, okay, here's an upper range, here's a lower range, and maybe it's range bound trading today.
Yeah. And I think 5,300 is going to be formidable. I think it's going to be formidable. It's below previous sessions lows, and even number, options number, probably a lot of interest there, probably a lot of orders there. So if this holds, again, it'll still, if it holds, if we get there today, though, we'll have a lower low, which I don't like, but we have 1, 2, 3 higher lows in a row, and then 1, 2, 3 higher highs in a row also, although this target wick was taken out, Tom, today.
Yeah, that's the interesting thing about these dojis, right? They don't look like much. Right? There's no body to them. How could that, just psychologically, that doesn't seem like a lot happened, but we made higher highs, we made higher lows. We're closing higher than we closed on Thursday. Like, this is an uptrend, It's an uptrend. We don't always need a huge candle like we did on Wednesday to have that advancement. Sometimes the advancement is subtle.
Yeah. I don't got nobody. Nobody. Oh, sorry. There was somebody else.
That was.
Oh my goodness. Anyway, all right, let's go. What we don't ever talk about, Tom, and we should. I have that 30-minute chart I put up there.
Yeah.
So this is a different time frame, folks. And this is one of the things that are really great about the Ninjatrader software. You saw I have 4 panels up there on one monitor. If you have multiple monitors, which I do, but I'm only showing one, you could have all sorts of windows open up, right? So you could have time frame windows, you could have commodity windows, whatever you want. And the 30-minute I just added, thinking, well, a lot of people look at 30-minute charts too, and so it's going to look a little different than a 10-minute, right? It's going to look certainly different than a daily, and so we would do though the same analysis on it, right? We would do the rectangles, we would do the retracements, we would do all of that regular stuff we always do. Draw some rectangles here. Now, the 10-minute in my mind is for shorter term trades. The 30-minute would be for a longer term trade. But you could certainly get validation from one or the other, right? Right now I'm saying, well, we have some pretty good support here at 53.11. Maybe I wouldn't have saw that on a 10-minute chart.
Right, exactly. You also get a sense of the, kind of longer term momentum with that MACD. So, what I see with the MACD is, well, momentum's down, the market's down, momentum's down on a 30-minute basis. But maybe it's starting to roll over. Maybe it's starting to get back to less of a downward momentum, and maybe it'll go neutral and then maybe positive, right? But we're starting to see the first signs of some less negative momentum for this market. And where am I looking? I'm looking at the histograms. I see the histograms. They were getting farther away from zero, which is the separation of those two lines right above it, right on in the study itself. But now they're starting to get a little closer together. Subtle, you might not always see it if you just look at the lines, but the histogram doesn't lie. Histogram will tell you the distance between those two. And when I see that these histogram bars starting to to trend the other way, right? To get closer to zero instead of farther apart. This could be a very early sign that the trend is reversing. Now you run the risk of being whipsawed, of that just turning right around if there's a big move down, but this is starting to show early signs of trend reversal on a 30-minute.
Yeah, and this bar's almost complete actually. So yeah, that's good. We'll keep that there. We'll keep you posted. Anyway, interesting. Still though, I'm looking for a retracement maybe to get short. We'll see. It's really hard to get short in this market. It's such a bullish market. It's crazy.
Yeah, and that's why I think this range that you've identified here might be something that once we get out of the opening range and once we get that news at 10 o'clock, give it a couple minutes to settle. See if we break out. If we don't break out, to me, that's like, okay, well, maybe we do use R1 as a place to sell. Maybe we can't get to VWAP, or maybe VWAP is the area, but maybe we're not going to be back up at the Asian market highs, right? Maybe we're just kind of in this level now. Okay, we've got a top area, we've got a bottom area. Maybe we use that until the market proves us wrong.
Yeah, for sure. And we're going to have that number in a couple of seconds here. The two numbers in a couple of seconds here. So we'll stay tuned on this chart for now, and we'll get ready. And by the way, coming up next is Craig Bewick. Talking about treasuries, CME market of the day treasuries. Craig's coming up next. So let's go ahead, guys. We're getting ready. I think we're ready here for these numbers. We're gonna go ahead and tune up our financialjuice.com, and we will be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
All right, we are back, folks, and we have data in the bank.
We do. So we had two reports come out. ISM manufacturing PMI actual 40.3. It's on the expansion side, right? It's above 50. It was forecast to be 48.3, and last month's 47.8. So it was a beat on forecast. It was an improvement. Looking good from the ISM. Now, we did also get construction spending month over month was negative 0.3, forecast to be 0.7. So contracted a little bit with the construction spending, which might be a little bit forward looking, but overall, I think kind of good news. I think that ISM PMI is good news more than maybe the construction spending is negative.
Yeah, one little footnote though, ISM's manufacturing prices paid actual was a little bit high. It was 55.8. Forecast was 52.9, previous 52.5. So those are prices paid, and you hear that phrase in your head time. It's like, all right, well, we're talking inflation, maybe inflationary a little bit,
right?
So, but that's to be expected, right? When you're running hot on construction spending, and you're competing for resources, right? That competition is going to drive prices up a little bit.
Yeah, I think another piece of good news was the new orders index was higher than forecast. So
Yeah.
that went into that 51 area, 51.4.
Yeah,
Forecast to be 49.8. So again, some good news there from the ISM.
absolutely. So we have, let's go back to the E-mini S&P 10-minute chart real fast. I mean, again, that pivot is holding. My rectangle at the bottom is holding. Although this is a pretty big red candle so far on the heels of that number coming out right now with that next 10-minute candle. First 10-minute candle after the opening range is over. We're still tracking well above that 5,300, well above 10 handles. And but we're approaching the lows of the day, Tom.
Yeah, exactly. I don't know. I mean, this is still brewing. I think this is still reacting a little bit. That news of, ISM, PMI, and then the construction spending, maybe this is indicating a little bit of a recovery. And so what does that mean for the Fed, right?
Yeah.
Is
Yep.
it-
For sure. For sure. Again, though, I think with that, I think 5,300 is kind of like our floor, our base, right? I mean, yeah, we could wick below it, we can close below it even, but I think it's going to be hard to do that. And right now, we're driving toward there. We're about 9 points away, right? About $450 per contract. So if you decided, well, we're going to do a breakout trade, we're going to get short right now. There's certainly some psychological targets that you could hit on the downside. And we, not recently, but not too long ago, we were tracking the bottom of that second standard deviation VWAP band for a while.
Yeah, and, the question here is it a breakout? Is it a retracement trade? Right now, it's looking, boy, the breakout trade would have looked nice, right?
Yeah.
Um, that's something that hitting the second standard deviation band are coming very close. We know it can trade below. It did when we had that previous
Yeah.
red dominant candle.
Yeah.
It broke outside or below the second standard deviation down. So I don't know.
That's a
This is a
that's
tricky
a
one.
great observation right here. These three candles. So we had a dominant candle, sellers, 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 right? We have a dominant candle. Is that going to set the pace for the next half an hour to 40 minutes of trading in the E-mini S&P? Very possible. And again, look at the previous session's lows. Another target right next
Yeah.
to the 5,300 level. So I'm not interested in hitting the buy button, Tom. I'm not.
No. No, and look at volume coming in. Now this is interesting. Your volume, we're getting a crooked smile or we're getting a fang in our smile, whatever you want to call it. The volume here coming in, market was waiting. Participants were waiting for these numbers because generally what we see is big volume at the 930 candle, then a little bit less on the 940 candle, and then a little bit less on the 950, and volume kind of tapers off until kind of midday average volume. Nothing really exciting, and it picks up at the end of the day. Here we saw a big volume spike. So, people who are paying attention, they're waiting to see what those numbers were. And maybe that's why we did see such a big reaction. We might not get a big body, but we certainly had a big high to low range.
Yeah, for sure. I mean, we what time is it? We have time for this candle to go, right? We have another 4 minutes, 3 minutes and 16 seconds. You can see at the bottom of my chart here. And, we might not close below the pivot.
I was
We
just thinking that we might be, that's like a huge wick through, right?
Yeah. Yeah. That's 5 handles through, more or
Yeah.
less. I mean, that's a $250 per contract move on a classic, $25 per on a micro. That's a pretty big move. And now buyers are bringing us back up here. So this point of control is becoming more and more important to me, Tom. Let's take a peek at that volume profile. Now, it's a double distribution for sure, right? So we have distribution overnight way up high, right? And it looks like a capital B, right? Capital letter B. We have that distribution with an old point of control at 3220, 5328. And now, ever since we had this big breakthrough VWAP, very low volume break at that, now we're developing a new kind of value area, right? This is the lower part of the distribution, pretty close to previous sessions point of control also. So this is kind of where this is where my eyes are for trading right now, Tom.
Yeah, that, really interesting. I would think, yeah, exactly. There's a volume gap. So setting up to me looking like, very possibly trying to test VWAP again and then resuming the downtrend if this pivot holds. And you've got a natural stopping area, right? That area that you highlighted as a volume gap, there was very little traded there. So the thought is, if we start to show signs of trading inside that range, we might just go to the top of that range and try to get back to where there was volume before, where there was price happiness before. So that to me is a natural area for a stop, right at the bottom of that gap.
Yeah, I mean, right, the shaded area, I'm going to make it a little tighter. The
Yeah.
shaded area here,
Yeah.
there wasn't a lot of deals done there. Look how small the volume is. The volume deficit, as you said, there's no price happiness here. Nobody wanted to stay here. Nobody wanted to trade around 22 down to 18, 17, right? We just blew through it with that big candle, and we haven't got back to it yet. So, from where do I get, where's my entries, where's my stops? That's a prominent place to consider.
Yeah.
So we'll see how this goes. But Tom, this is amazingly, I'm going to use the word resilient.
Yeah. Yeah. I mean, it looks like it's staying within that range, right? I mean, it didn't stay completely, right? We did wick through it, but it may close above that rectangle. And to me, that's pretty powerful, right? If you can move the market so far through it and then come right back up, it's a pretty, interesting place to be.
Yeah. And this is a good point. This is a good lessons learned early. I mean, this is why micros are good. So if we were to get long at the area support, which is reasonable, it's a reasonable idea, right? There's just support here. Let's get long, right? At 0950. Well, look how much heat you would have to take, right? You had to, we wicked all the way down to 450, right? That's $250 a contract move down. And if you had your stop at what you would consider a reasonable place, I don't know, bottom of the value area or something like that, you would have been wicked out, but you might have been right on the trade if you were trying to get long here.
Right.
So we got to, especially a low volume day, right? After a holiday, maybe the holiday's still going on. I don't know. Certainly in Europe, in many places in Europe, it is. The institutional investors aren't involved, I don't think, very much right now. So you get these wicks, even in a big E-mini S&P, where you're going to have the bids and offers measured in the triple digits. Well, maybe not so much triple digits on the bid side here, a lot of double digits here. So that's unique. It's also.
Yeah. Yeah. I think, Jim, I think it's probably let's try something. Maybe we do a simple let's go long at the bottom of the rectangle. Let's go short at the VWAP. We surround the trade, we get a position, and then we see what to do there. I just feel a little more bearish because we've been down here so long, but I like that. I like that. I like that. I like that spot. But that's great. Let's see if we can go long. And if we can't, market moves up, we go short. I don't see a direction brewing, right? I just see sideways.
All right. Try to do that with your regular stock account. Advantage goes to futures. I mean,
That's right.
yeah. I mean, so right now, so we have the market surrounded, right? We have the market surrounded, and as long as we're trading, in this range right here, everything is good. So we're being patient. We want the market to kind of wick back into my area support, right? Tom's more conservative than I was at 58.75, but it's a very realistic target. And on the upside here, alternatively, we can get short, right? Somewhere up here. I don't know. I'm below our one time at that 37.5 harmonic, but that harmonic's no good anymore. I got to bring it all the way down. Hang on. So I don't know how you feel about the actual positioning of that 16.
I think that's fine. I think VWAP's going to track down R1. It's going to remain where it is. The 50. You're all talking kind of these are all in the same area, in the same neighborhood. So, getting in a little bit ahead of that area, I think is a great idea.
Yeah, I agree too. I mean, we start getting closes above the VWAP, then I'm going to be worried.
Right. Right.
So, then I'm going to be worried. And as a matter of fact, when you have this kind of setup, you could at this point put your stop losses in. You probably should, right? So let's assume we get short, right? How much heat do we want to take before we get out? Previous session's highs, which is right by that 62.5. The volume weakness, that's that higher standard deviation band. All of these are potential areas of interest. If you're going to go up to previous session's highs, that's about a 5-handle move, right? That's about $250 per contract. But I would probably want to give myself a little bit of wiggle room up here and get it around 2,200. I'm going to throw that in right there. And then once you're filled, depending on the price action, you could change that stop along with your target. And on the downside, I don't know, you almost have to respect that low wick, Tom.
Yeah, I'd give it probably a little more, maybe to where that second standard deviation band is right now.
Yeah.
That's going to change, of course, if we start trading down there. But it's kind of got a almost balanced look, right? Your risk on either side slightly less than the targets that we have, because you get filled on the sell. You're a little closer than the stop to the target of again that right around the what is that, or the pivot itself. So I kind of like the balance here.
Okay, so let's recap. We don't have a position, right? We're open-minded. We want to get long or we want to get short. A couple targets there, a couple stops around it, right? Now you have some work to do once you get filled, if you get filled, right? It's in theory, we can go sideways and not get filled, but most likely we'll get filled. And then you'll have an extra stop you'd have to cancel, right? So if you're long, you'd cancel the stop up here. If you're short, you'd cancel the stop down there, and then you could move targets around to suit your trading preference.
Right.
This is the third lower high.
Yeah.
I don't want to freak anyone out.
Yeah, I mean that happens when you're range bound, right? You do have these mini trends, these low, 3 or 4 candles of lower highs, three or four candles of lower lows, but then you have a reversal. It might last 2 bars, right? This is what happens when there's low volume. Just you don't get the big moves. We look at the range, the distance between your target to sell and target to buy. You're talking 9, or not even 9 handles, 7 handles.
Yeah.
So it's not an all-day trade, I guess, is my point.
Yeah, no, I agree with that too. Right. There's a time limit. And so when I'm using a 10-minute time, I do not want to be in a trade more than an hour. And I'm hoping I could be there in a half an hour, but I have kind of a 6-to-1 rule. So if I'm making a trade on a 30-minute, then it's going to be a little bit longer. I'd multiply that 30 times 6, and that will get us a few hours. 5-minute, 5 times 6. I would have a 30-minute duration window on my trade idea. That's why I used the 10-minute, because when we started doing these shows way back in the day, we only had like an hour and a half to work with.
Right.
Which isn't the right way to have a trading strategy. You should have all the time you need.
You mean don't base it on your live stream schedule, right? If you're a trader.
Yeah. Oh my goodness, man! Oh man, this is interesting. Right around that BWAP band. Well, while this is percolating, Tom, I think we're going to get a fill. Let's see what else we have on the board. Now Nasdaq's doing pretty good. Micro Nazi is the place to be. Holy cats, look at that guy. That's a benchmark candle, right?
That is, yeah, for sure. I mean, that's not quite the entire range of the day, but if it's 90%, I wouldn't be surprised. 85 to 90% of the entire trading range happens in 10-minute period. That's pretty amazing.
Yeah.
But it's, can happen on these light volume days. Interesting where we retrace what, 25% back down.
Yeah.
Yeah.
Yeah, right. So did I do that right? Low to high, right? So low to high, we're tracing back down. 37.5 is right at the bottom of the value area. 50% is right below that target wick down here. That's a target wick. I'm going to draw a circle around that. We did get filled, I think, Tom. So we're going to go back to the mini S&P in a second.
Okay.
But let's just establish the potential there. So there's a wick. The VWAP's in the way, though, Tom. So we'll see if we kind of get that retracement back to 50 and take out that crazy wick we have here.
Right.
But we might not. We might not. So let's put that on pause real quickly. Let's go to mini S&P. Click it over. And we're in the game. So the chart trader, I have chart trader turned on, but hidden. If I didn't hide it, it would look like this on the right-hand side. But I do have it hidden to give us some more real estate to look at the chart. And my labels are activated, right? So I have my position tab right there. It's green. I'm long one contract. There's my down 2.5 points. And again, target wick is in play down here as well. We're breaking through that area of support. This is the second 10-minute candle. No, is it the second 10-minute? Yeah, it's at the end of the second 10-minute candle.
Right. And this is coming off of the news that came out, at 10, we got those two reports. It's easy to see the pattern when it's happening, right? We got stopped out. This market's trending down. You mentioned there could be lower lows, lower highs. It's what's happening now. Taking out, we talked about on the Dow, E-mini Dow, taking out, Thursday's lows would be very bearish. We're about it. We're almost at Thursday's lows right now on the E-mini S&P.
Yeah. And it's interesting. That kind of happened in an odd time. It happened at what, 10:18? Something like that.
Yeah.
And so not an even number, right? Not a 10:15, right? When you would expect some algos and stuff to kick in. It happened in an odd number. And I think that's just the case where the support failed.
Yeah.
Sellers just jumped on, right? We're right there, and continuation selling is occurring here. Previous session's low is in play.
Yeah, for sure. Maybe it's just the digestion of the news and saying, okay, well, what does this imply? What does this mean? We saw that gold rallied on news that interest rates might be starting to be trimmed, right? And not just in the US. Maybe that's being put on hold, right? Or maybe the market is thinking, well, maybe it's a little too early. Maybe it's not the case. And the funny thing about these reports is how much the market reacts. It's kind of like fine-tuning a machine, right? Like a big machine with all these different inputs, and one input might be so insignificant or so small or so minor, but everybody thinks, wow, this is what the Fed's going to think. This is what the market's going to think. This is what the economy is going to do based on this slight adjustment. You know what I mean? Like the decision for new rates is going to be for another month. Why is this such a huge move?
I know.
You know what I mean?
And then we have all the Fed speakers this week too. It's going to really kind of cloud things up right here, right now. But kind of looking at this, all the equities now, NASDAQ was down over 100 a minute ago. Yep. Now it's down up 100 a minute ago. Now it's only up 50. ES is down for the first time. Russell is down big. YM is down big. Going down to gold, gold's backed off a little bit, right? It's only up $15 now. Yeah. It was up a lot more than that. Crude's kind of holding its own, up 23 cents. Not very dramatic. And all the interest rates are down, right? All the interest rate prices are down, which means yield is up. So,
and currencies are down, right? So dollar is strengthened on this news.
Yeah. So very interesting. In any event, we'll see if the bottom is in or not. I don't know if it is. We're right at that. We almost got to 5,300. 5,301 was the low. 5,301 and a half. So about 6 ticks away, and which was really, really even closer to the previous session's lows right here. So again, right now I feel like I should be bearish. Now, from a lessons learned point of view, Tom, how sweet would a breakout trade would have been?
Oh, well, of course. Right.
I know.
You just flip those orders, right? You say, okay, if we're going to break out, here's a range This is kind of a slightly different take. You see a range brewing, and the question is, do I want to stay range bound? Do I want to stay within the range? No, maybe there's more opportunity when it breaks out, right? Because now it has to find a new level. Where is that new level? So one of the ideas could have been, instead of selling the top, you sell the breakout of the top, or you buy the breakout of the top. You don't buy the range bottom, you sell the range breakout of the bottom. And that would have served us well, because as we know, ranges don't stay that rangy, forever. So at some point we have to get out of the range.
Right. That's a good point. But in our defense, in our defense, we had, this area of support held ever since, 810 to 820 candle. And this area of resistance held since then also. Now, I know what you're saying. Well, yeah, eventually we're going to break out, which is true. But the only evidence that we had to maybe give us a clue here was that big target wick that we talked about. And then buyers brought us back up. And so that target wick might have been a good sign. So what I'm going to write down in my notebook is, between 10 and 10:30, if you see some range bound trade activity that's been going on for a couple hours, look for outlier wicks, look for outlier target wicks that are recent that might give us a clue of things to come. Now, one time isn't enough to declare victory on that trade idea, but it's in my head right now.
Yep. And thankfully it's a small enough day where the ranges, if we have a bad trade, we're using a simulated account. So this is just exploring ideas. But if this were a real live account, that loss wouldn't have been horrible, right? It was something that we put in a target that was well within a reasonable risk tolerance.
Yeah, and remember, micros are friends too. So you can do this exact same trade in a micro trend. So when I just added labels to actually show you guys what we did. Now I haven't canceled this trade yet. I'm not sure I want to, but we'll talk about that in a second. So you can see here my little label. It shows me, what time frame that I got in at, and what time frame I got out at. It has me my price. I sold one at 03 half, bought it back at 08.75. Remember, stop losses act. I know what you're saying. Well, that was not the price you put in. Well, stop losses behave as market orders would, right? So, that's 5 handle. That's 200. That was $262.50.
Right.
So, but we'll see. I don't know. It doesn't look like we're done yet.
Jim, let's talk about the contest.
Oh yeah, we got a big contest. If you're just joining us, it's coming up, starting now, I guess, right?
Right. First contest that we're trying some new things this year, and this is the first one, hopefully in a series, Jim. Guess the close. You can win some Ninjatrader swag, but the guess the close is guessing the close of the E-mini S&P June contract as of Thursday this week. Thursday 4:15 is the gauge, right? It's the benchmark. So the person who's closest to that could win Ninjatrader swag. Now I say could win. You must be a resident of the United States of America to take possession. But you do have until tomorrow night, midnight Pacific time, to send an email to learn@ninjatrader.com with your guess the close subject line, and even put the close in the subject line, right? You could do that. Makes it easier for the person who's going to tally all the entries. But that's happening today. Tomorrow, you can send us an email, one email per entrant, please.
Absolutely. It's going to be fun. I'm guessing.
Yeah.
I'm gonna try to do better than this last trade idea.
Yeah,
I'm
you
gonna
got
do
to
it.
think every trade is a guess the close, right?
Yeah, kind
Of
of.
sorts,
Yeah.
right?
Yeah. Yeah. That's a good point. I mean, I'm gonna pull up my daily chart, and I'm just gonna. I'm doing it, man. I'm looking for target wicks. I'm looking for trend lines. I'm looking for retracements. I'm gonna do everything I can to come up with a good Thursday settlement price. 4:15 East Coast time, 3:15 Central time. That's what I'm doing.
That's right.
But but I have another day. I don't have to do it right now.
Right, and we'll share our guesses on Wednesday. We don't want to influence what you might guess by what we think, as we can see, some of our ideas always aren't at the best. So but we're learning, right? We're learning together. That's good.
Yeah, and the other thing is you have Chair Powell on Wednesday. So Chair Powell is going to be, who knows what that cat's going to say.
Right.
Anyway, let's go back to the micro Nazi, Tom. It was looking a little different, and then we had a big sell-off, and now we're trying to fight our way back up. I'm going to pull up the volume profile so I can get a better understanding. This is a lot of volume up here at the top of the profile. Point of control is at 578.25. That could be a possible destination for later on. We still have a series of lower highs and a series of lower lows. And let's see if my retracement is in the right spot. It's more or less correct. Low to high. We trace back down to 67.5. We closed above it briefly, and now we're bouncing off it. R1 is also, pretty keen. I like that. I'm going to put a rectangle right there around R1.
Yeah, notice that the VWAP band and its standard deviation bands are closing. They're kind of turned down, and they're all turning down now, but this looks like they might be getting a little bit narrower, right? They were wider earlier. Even after that big move up, they really didn't space out a little bit. So, yeah, it's an interesting range-bound trading day.
Yeah, I like getting short off the VWAP.
Well, let's try it.
All right, we'll throw this in because we have actually we do have our special guest coming up here in a minute. I'm throwing it at that 37. Craig Bewick from the CME Group. He's going to be joining us with the CME Group Market of the Week, and we're going to be talking about treasuries. The treasury asset class is going to be super good. So let's take a really quick break, and we'll get Craig in here, Tom.
Great.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
All right, we are back, everybody. I appreciate your patience here during the break. And we have live with us today, Craig Bewick from the CME group. He has a long, fancy title. I don't have it memorized yet, Craig, but thanks for being here with us.
Yeah, let's just say I work in retail sales, and we'll leave it at that.
There we go. But, I love it. You write kind of a newsletter, right? Every once in a while?
Every day. We put out a newsletter that, kind of recaps the markets every day. So I do a little editorial part of it where I'll write some commentary. Most of it's kind of a recap of what happened that day. And, I'll try to pick out a market that, either had an outsized price move or an outsized move in vol or something like that. But then we've also got some market specific videos that we put in there, and it's free. So it's called CME. It's called In Focus. And if you want to subscribe, you can do that at cmegroup.com/infocus.
In Focus, INFOCUS.
Yep.
All right. My mom would be proud I spelled that right.
The fastest growing financial newsletter on Whacker Drive, I think is what they're saying.
Oh, there you go. All right. I mean, I subscribe to it. I get yours. I get Eric Norland's. I get, I used to get Blues.
Yeah.
And then Jimmy and Bobby's videos too. They're also in the mix at the CME.
Yep. They're over here a lot doing videos and stuff for us. Well, Jim is. I think Bob does his remote.
Well, Bobby's down in Florida most of the time.
Yeah. I believe so. Right.
Yeah.
But yeah, I think it's all good stuff, and we try to hit all the markets, kind of like what we're doing on your show here. Try to talk about what's relevant. And, so I would encourage everyone to check that stuff out.
Yeah, no, for sure. It's good stuff. I read it every morning. You can subscribe, and you could also get it by email, right? So you could say, yes,
Yep.
Send me this to my email, and you log in, and boom, you just get these automatic emails, which makes it easier for me since I can't even find my socks sometimes.
Right.
Anyway, so let's talk about treasuries. I mean, there's an endless, our whole mission here is once a week, get you on board, talk about one of the great CME group asset classes, because you cover all the asset classes, right? We got metals, energies, grains, we have equities, we have crypto, currencies, the whole thing, right? So we're here to talk about treasuries today, the yield curve. And there's so much stuff going on with respect to Fed funds, anticipation, and the behavior of price itself in some of these really liquid markets, like the treasury. The 10-year note is like the most liquid market at the CME, right? It's
one of them for sure. If it's not, and I think there's probably different ways to define liquidity, but certainly it's a huge liquid. I mean, it's a treasury market, and I think what's the outstanding debt now? It's up to it's crazy, right? Like $34 trillion, something like that, right? And so when you kind of put it in that perspective, and these are futures on that treasury debt, it's a huge market, and I think you're right. And I love the fact that we're able to cover all the different asset classes at CME on this show. But with treasuries, I mean, in reality, we could probably do treasuries every week because, like you said, there's so much going on in the interest rates markets. They impact pretty much all of the other markets in one way or another, I think. And even today, we didn't plan this, but we got a pretty big move, I think, in the 10-year today, right? Maybe coming off the PCE number that was released on Friday. I'm speculating a little bit on what's causing today's move, but I think it was down 8 or 9 basis points, if I'm not mistaken.
Yeah, let's take a peek, Mission Control, of a 10-year note on here. I mean, it's on the move, right? We have this is a big red candle here. This is a daily chart of the 10-year on the 10-year notes. We have a bottom here that I identified with a rectangle. I know it's hard for you to see, Craig, but big sell-off. I mean, this is a very, very, very large sell-off. Some of it might have been PCE, but also some of it might have been the Commitment of Trader report came in this way, also suggesting a downward move as well. So.
Yeah, and again, I'm not here to speculate on what's causing it. I'll leave that more to you and the experts. But it was good timing. And again, we're looking at a price. And we can get into the products a little bit later. But this is a graph of Treasury prices. So when they go down, that means that the yield is actually going up, right? Prices and yields move inversely to one another. So when you see the price decline like that, that means it's an increase in the yield or the interest rate.
That's right. And I don't know if you could see this on my market analyzer, guys, but I have a Treasury section here. I call it Treasuries. You can call it financials. You can call it whatever you want, but I call it Treasuries. And, I do track the 10-year yield, right, as you suggested, and as well as, which is at 4.306. And then the 2-year yield, which is at 4.586. So about a 28 basis point separation between the two.
Yeah, and that's one of the things with interest rates too that I think makes them such an interesting trade, is that you can trade what you think the 10-year is going to do, right? You can, if you've got some sort of core belief that, based on these macroeconomic factors or whatever, that the 10-year yield is going to rise, you've got, your inflation expectations are such that you think it's going to rise. You can do that, or you could do that with the 2-year. But what a lot of professional traders do in these interest rate markets is trade that shape of the yield curve, right? So they don't just trade, based on their view that the 10-year is going to go up. They'll trade based on what the 10-year is going to do relative, for example, to the 2-year, which has been, that's a very well publicized Treasury spread, which incidentally, we're in the middle of, I believe it's the longest inversion of the 2-year yield and the 10-year yield, I think, in all time. Starting, was it back in July of 22? I think the yield curve first inverted.
I don't know the exact date, but you're right. It seems like it's a long period of time, and everybody is suggesting, well, once that inversion happens, you have 18 months until you're going to have this recession, which, well, everything has been dragged out now forever. So, it's still GDP now is tracking 2.35 or something like that. And I'll tell you, no, 2.3. New York Fed nowcast, they call it, is at 1.87. So again, we're not less than zero yet.
Right, and that was the whole thing. But if we think back to when it inverted and it might have actually inverted momentarily before July. I think it inverted in July and then stayed inverted. But all of the financial press then reports on the fact that historically, and there's no guarantee, but that historically, when the 2s and 10s invert, it's usually been followed by a recession, as you mentioned, Jim, right? Which is why that particular spread, I think, one of the reasons why that particular spread gets so much press attention is because of the significance, if you look back in history. But, even going back before that, you look at the yields. Obviously, during COVID, everything was kind of cut to zero, right? With the lockdowns, and the Fed came in and cut rates to zero, and it kind of looked like they were going to stay that way. But in 2021, you remember when we first started seeing some of these price increases, there was this question of well, it's transitory, or maybe it's remember that, like, inflation is transitory. And it was sort of like, I don't know, we're spending a lot of money. And then, I think it turned out, I think it's pretty clear now that it wasn't as transitory as maybe the Fed, would have hoped, as we've seen now. But I think it was the fall, late 21, we saw them start to increase, those short-term rates, which incidentally, the Fed has a lot more control over, right, than the long end of the curve. But they started, pretty dramatically to increase those short-term rates with their Fed fund targets and things like that. And it's really been, in my opinion, a very interesting trade since then.
Yeah, no, yeah, in my world too, though, from my historical perspective, um, the treasury market's kind of been smarter than the other markets, right? I don't want to use the word leading, but I want to use the word smarter. I think they anticipate quicker and they trend in a way that all the other markets kind of catch up to. Does that make sense?
Yeah, it makes total sense. And I mean, the sheer size of it, right, of the interest rates market, I think makes it such a critical market. And then, like I mentioned at the onset, name me a market that the rates don't affect, right? Like today, I think, we're seeing this increase in yield. We're seeing an increase in the dollar, I believe, versus most of the currencies. And then that makes some sense, right? If US yields, if the expectation is that US yields are going up, well, then maybe people want to buy US dollars in order to invest in that yield, right? So that makes some sense. The interesting one today, and this is kind of something that we've seen over the last couple of weeks, is gold is up even as yields are up today, which is a little different, I think, than what we'd seen, maybe over the last, 6 to 12 months, where there was this really strong negative correlation. When yields rose, gold would break. And again, that kind of goes back to the fact that gold is a non-interest bearing asset, right? And so the higher yields can in some cases tend to be a headwind for gold. But more recently, we've seen this gold rally to all-time highs, I believe, even as we're seeing kind of persistent higher yields, which I think is kind of interesting. And we're seeing it in spades today, I think.
Yeah, gold has been acting unusual. And, I had Eric Norland on last week. I don't know if you had a chance to watch, but, he's got such great information on some of this stuff. And we were talking about the possibility that central banks now are buying a lot of gold because it is kind of bucking a trend, right? So it's that could be one reason why this is happening. I don't know, but it's extraordinary market in gold for sure.
It is, and like at all-time highs, and today, if you look at the options market, the vols pop today in gold. So it's a really interesting, dynamic here between rates and gold. But anyway, getting back to my point, but rates also are going to affect the other commodities like oil, right? If they're denominated in dollars. So I think, kind of getting back to your point, it's such a big market, and it impacts so many different things. That in some ways it's sort of like, even if you're not trading rates, you're kind of trading rates, right? Because they affect so many of the different asset classes, and of course stocks, right? If some crazy thing happened, and you were mentioning Powell's talking this week, and he said no rate cuts this year, and I don't think he's going to do that. I'm just kind of using that as an example. Well, that probably would be a pretty big headwind for stocks, I would imagine.
Well, yeah, but it also affects consumer behavior, right? Do I buy a new car? Do I keep my old beater? Do I rent or buy? Those kind of factors also are really important here. So you're right, though. The other thing is you mentioned funding not only the budget but the debt, right? And does it make sense now for Treasury to do more of their funding at the short end of the curve because rates are so high, instead of locking in a lot of borrowing at a higher rate for a 20 or 30-year instrument, which is going to have a different impact on price of those instruments, which goes to your point of spread trading.
Absolutely. And the different dynamics that affect the short end and the long end of the curve, because they're different, right? The Fed has a lot of control over the short end with its monetary policy and things like that. Whereas the longer end of the curve is kind of more beholden to people's expectations on the economy, on their expectations of what's going to happen with inflation and things like that. So it's, and I think, what we've seen, just the 2s-10s inversion that we've talked about, not only is it the longest inversion that I think we've ever seen, it's one at certain points has been the deepest, right? I think a couple different times, the difference between the 2s and the 10s got to right around 100 basis points, which is a deep, long inversion still.
Yeah, it spiked over that for a while. So.
Right. So, it's an interesting, again, you can trade a certain part of the curve. You can trade the curve against itself, like, with these spreads that we're talking about. But all of this, I think, makes it a very interesting market.
Yeah. So now recently, we've had this 10-year note for a long time. We have 30-year bond for a long time. I remember, in the early 80s, we were doing knob spreads on the floor of the board of trade, notes over bonds or bonds over notes, depending on where you wanted to be. So they've been around a long time. But then you guys introduced this concept of ultra bonds and ultra notes. Could you explain what those are?
Yeah, and I think we've got a little time, and then I'm glad you asked, because we've actually added some new products to our treasury offering, which I think is great. It gives people even more flexibility, but I think it's worth explaining, because I think in some cases it's like, why, wait, what's the difference between this and this? So I think maybe just to back up for a minute, we've got. And we're not going to talk about some of our short-term interest rates that is more of an institutional product like SOFR and things like that. But let's just look at the treasury complex. And you're exactly right. So for years, we kind of had the 2s, 5s, 10s, and 30s, right? For going back to, I believe, when you were in one of those pits, right, Jim? Going back in the day. So we've had those, and the 2-year note is a $200,000 contract. The 5s, 10s, and 30s has always been a $100,000 contract. And these things are quoted in price. So it's kind of like the graph you have up, right? It might look something like 120 and 7/16 or 7.5/16 or something like that, right? Quoted in price. They're deliverable contracts, right? So if you were to hold one of these futures until it expired, and you were long it, you would actually take delivery of physical U.S. government notes and bonds. And so because of the fact that they're deliverable against a certain basket of actual treasury issues, right? So if you're long, let's say what we used to call the long, or what we call the long bond, right? The 30-year bond. There's a basket of treasuries that are eligible to deliver against that futures contract. And within that basket of treasuries, one particular instrument, and we're not going to get into the fixed income math that goes behind this, but one of those issues is called the cheapest to deliver. And it has to do with like accrued interest in that particular bond and things like that. But one of them is going to track, so the future is going to track what we call the cheapest to deliver. And what's interesting, and what some people may not know, is for the bond, the regular 30-year bond, that cheapest to deliver is actually a treasury instrument that has like 16 years until it matures, not 30, which is kind of in the name, right? So that's kind of a long way to answer your question of why do we have an ultra 10-year and an ultra 30-year bond, is because those two instruments, the cheapest to deliver, again, based on the basket of eligible securities that can be delivered, is going to be closer. It's going to be like 9 point something years on the ultra 10-year, and I think it's like 29 years on that ultra 30-year bond. So we introduced those, what we called ultras, in order to give people a maturity that was closer to that 10-year or that 30-year mark on the yield curve. Does that make sense?
So that was probably the best explanation I've ever had on that topic. That makes, I'm not kidding. That's a great way to describe it when you tie it into the deliverable at the end of the day. And by the way, for a non-institutional trader, don't try to take delivery on anything. Believe me, it's not worth it. There's too many fees and costs associated with it.
And I'm sure that Ninja would be calling you up anyway, saying, "Hey, you're coming into delivery. We're going to get you out." I would think that there's some risk manager somewhere watching that.
Yeah, I mean, in my old life, every once in a while, one would slip through the crack. I'm like, oh no.
Right.
But that's a whole other thing. But what tends to happen with the treasury debt, the longer the duration, the greater the average true range, or the daily range on average, right? So the ultra bond is going to have a bigger range usually than a 30-year, than the ultra 10, than the 10, and that could be attractive depending on your risk tolerance to participation. In other words, if I feel like, hey, the ultra bonds are going to move more today, and I have a strong bias on the direction it's going to move, then maybe I would want to participate in that. Or, hey, I just want to do the regular long bond, the 30-year one, because I'm a little bit risk adverse of the ultra, I could do that one. So you have that choice because of that, the price behavior on any given day.
And that's why and that's exactly why we introduce those. And we want to give people the ability to pinpoint that exact place on the yield curve that they need exposure, that they want exposure. And then to your point, I'm not going to get into the fixed income math, but just to differentiate these products versus the yield products that we have that we'll talk about in a second. These are quoted in price and they're based on a cash treasury. So they have what's called duration and convexity, which means, and we won't get into that, but what that means is that the dollar value of 1 basis point move is not static. And because of fixed income math, 1 basis point move in yield can move the actual dollar amount of the bond by varying amounts. Now, I only bring that up, and again, I don't know that it's necessary to really get into that if you're trading these. What you want to know is what 1/32 means and how much money is 1/32 and things like that. But I bring that up because we've also introduced 2 other products besides the $100,000 and $200,000 ones that we just talked about. What was it? Maybe a year? I don't even remember when we introduced the yield contracts. Maybe a year or so ago, maybe a little bit more. But we introduced these futures products that are they're quoted in yield. So instead of seeing the prices that you do in front of you, which is like 116 and 7/32 or something, you'll actually see that 4.30. I'm making that up on let's say the 10-year. I thought that's what you said earlier.
You're pretty close, yeah.
Am I? So you'll actually see that on your screen. So you can actually trade instead of trying to kind of figure out what that 116 means. You're trading the yield at 4.30%. And that basis point. So if it goes from 4.30 to 4.31, that's a $10 move. That 1 basis point move is $10, no matter if it's a 2-year, 5-year, 10-year, or 30-year yield contract. So you don't have to worry about this duration and convexity. And that becomes even more important if you want to spread the 2s and the 10s with these yield contracts, because that value is always $10. So, and these are cash settled and they're based on what we call on the run. So it's the most recent 10-year or 30-year or 2-year or 5-year that the Treasury has issued, not this concept of cheapest to deliver like exists in the traditional Treasury futures contracts. So we've got 2 different ways to trade them: the price, the traditional, the price, and then the yield. And then just recently, within the last couple of weeks, we introduced micro versions of the old Ultra 10-year and Ultra 30-year. So we essentially introduced a $10,000 version of the Ultra 10 and the Ultra 30, which are quoted in price. They're based on that cheapest to deliver and all of that stuff. So to me, it's sort of like if you were a trader that was used to trading in price, maybe you've been trading the traditional treasuries for a long time and you understand that. Well, these give you another option, like a smaller sized option if you want to sort of more customize your exposure, but trade them in the same way as our old treasuries. Whereas maybe you've never traded a treasury before and you don't understand all of the pricing and stuff. I think the micro or the yield contracts is a good way to sort of learn about that kind of thing. So I'll stop there, Jim. I know that was a lot, but we have a lot of products now and I wanted to explain it.
But the micro, you just released those like yesterday or like a
couple
weeks ago, right?
Like 2 weeks ago. Yeah, hot off the press.
Okay. All right. Well, I'm looking forward to that as well. I've been a price trader forever. I've had people my whole life say, well, what does that translate into yields? And I'd be like, I don't know. I didn't care, right?
Right. But that like 1/32 is $31.25 and your P&L, right? And now with the micro, it'd be $3.125.
So going to let's talk about the yield let's talk about the 10 and 2-year yield right now. It's inverted. We've been talking about that, right? I don't know, 28 basis points this morning, something like that. If you think that inversion is going to go away, then you could actually do a spread trade there, right? You could actually sell one versus the other and buy the other one.
Yeah, absolutely. And you can do
explain how that would work.
So in my view, and again, I'll give kind of the two different ways. If you're a little bit newer to this and you want a simple, clean way to do it, the yield futures contracts, I think, are the easiest way, because it's a 1-to-1. You don't have to worry about the fact that like the 2-year and the 10-year have a different ratio and things like that. So if you use the yield contract, you can simply buy that 2-year. I'm sorry, you would sell the 2-year, right? Because you're thinking that the 2-year is going to go down relative to the 10-year, and that inversion is going to go away. So you can sell that 2-year at whatever yield it's trading at, and then you can buy the 10-year yield at some differential, and you can actually do that as a spread on Globex. So you don't even have to do 2 executions. You can, we have market makers out there that are quoting that. I think you said it's 28 right now. So you might see a price on your screen that looks something like down 28, at down 29 or something like that. Or did I reverse that? But you can actually do that spread as one execution, and then you'd have that position on, and so it makes it very easy.
Right. So we'd think about that as we'd leg into that over here. So you would go ahead, you would put your limit order into, wherever you want, right, to try to get long the 10. And the same thing with this, get short the 2. And then you could hold that position. I imagine you get some kind of margin break on that. I'm not sure what
right. You're going to, the clearinghouse is going to look at the correlation between them. And there's some, I don't know what it is off the top of my head. But in most of our products where there's a statistical correlation, you're going to get a margin break on, if you're long one and short something correlated to it.
And then you would do the opposite if you felt that the inversion was going to increase. It was going to get bigger than 28 basis points. You would do the opposite. You'd buy the 2 and sell the 10.
Exactly. And you can look at that graph, the 2s versus the 10s, and it has a fair amount of volatility in itself, right? Not as much lately. It's kind of been in that sort of 30, I think, to 33. It actually, I don't know how you say it. I actually think you say it's steepened because the curve, it's counterintuitive now that it's inverted. But today, you saw the 10-year pop, I think, more than the 2-year. So that moved a little bit more today than it has, I think, recently. But like we were saying before, at one point last year, it got down to 100 basis points. So if you did the trade that you were just talking about, let's say you put it on at minus 30, thinking that it was going to get more inverted, we'll just use that phrase, and it went to 100. Well, that's 70 basis points. Even on these yield contracts, that's $10 a basis point. That's on a one lot on a relatively small contract. Now, again, I'm not saying it's going to go to 100. That's a really deep inversion of it, but just to give an example.
No, but it's, in a normal environment, we would say, well, it could go to positive 100, right? I mean, it could do that.
Absolutely.
Anyway.
And that's what's so interesting is with this market too, is there's only recently, I think, has that FedWatch tool, right? Which a lot of people are familiar with. It uses our Fed fund futures contracts to sort of assign a probability to what the Fed FOMC is going to do at each meeting. And only recently is that I think it's saying 3 rate cuts this year right now is what the FedWatch tool is saying, which is also what Fed Powell, at least I think more recently, has said. But until recently, there was a divergence between what the chairman was saying and what the FedWatch, what the market was actually saying. So, it's just another interesting thing to watch with the interest rate market.
Yeah, I had Blue here last week, and he was talking about the dot plot. The Fed funds rate and the dot plot's finally caught up with each other on that. And, the marketplace is one of the most efficient things of all time, right? It is efficient. There are people that are betting money, not betting, but trading, hedging, doing all sorts of stuff that make this incredibly an efficient market. And that's why I hate the term when people say, well, the S&P it's got to correct now. Like,
why?
What do you mean? It's always
Right?
it's always correct. You mean mean you think price should go down? Okay, that's different. It's
Like,
not incorrect.
When was it wrong? Right?
Right.
Yeah,
right.
no, and that's the thing is like the Fed funds, that is the market, like you say, that's where people's money is. So it's always interesting when that diverges from what like the chairman might say or something. But
So,
I think you just said it too. It's kind of more in line now.
Well, we'll see what he has to say in Wednesday, for sure. But hey, Craig, I really appreciate you being here with us. We're up against time. What's the best way for people to follow you?
Yeah, I mean, my In Focus is a good way. My email is just my first name dot last name at CME Group. I'm on LinkedIn and stuff like that too. So any of those ways.
All right. Well, I appreciate you being here for sure. Looking forward to next week. Have a great day, Craig.
You too. My pleasure.
All right. Coming up next, folks, we're going to take a quick break, but coming up next is Alex Cole, Tom Schneider. We'll be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit ninjatrader.com to get started today.
Well, good morning, good afternoon. Welcome back to Ninjatrader Live. I'm your host, Tom Schneider, CMT with Ninjatrader. In this segment, Traders Workshop, we bring on Ninjatrader ecosystem partners so that you can learn a little bit more about the markets and see if there are some tools that can help you. And today's no different. We're bringing back on Alex Cole from Go No Go Charts. How you doing, Alex?
Good morning. Very well, thanks. How are you?
I'm doing great. I had a great weekend. How about you? Everybody good there?
Yeah, we had a good holiday weekend. Got the family together. Nice day yesterday. So all good things.
That's great. That's great. Yeah, we had beautiful weather. We went to a castle. We went to an actual castle. There's a castle on Long Island, and we found it and had a nice brunch there. So, but we're here to talk about charts. We're here to talk about an experience both you and I are very familiar with. And I think maybe some of our viewers are too. If you're new to charting and you're new to the markets, charts are very integral to what you might be looking at when you're trading. And you start to learn about the different tools you can put on charts. It's easy to want to throw everything you learn about onto a chart. And Alex is going to walk us through some of the ways you might do that if you're looking at trend.
Yeah, and I think what's the sort of the big problem, Tom, is that it's very valuable to add layers of analysis to your charts. So we want that information. We want that discipline checklist. We want to stack the weight of the evidence in our favor. We want to get multiple confirming indications from different things so that we can feel confident about what we're looking at. So we want all that information, but like you said, sometimes you can overcomplicate your analysis. But if you want, let's just talk quickly about how somebody might go through the process of building a smart, disciplined checklist of identifying trend. And what you'll notice in this case, this is of course looking at the minis of the S&P, and we're in a trend. I mean, it's fairly easy to see that once it's happened. We know that we're making a series of higher highs and higher lows. The chart is moving from bottom left to top right. But at what point in the sort of middle of this screen would we be confident that we're noticing a trend in the upward direction? And that's what we want to be able to do so that we can trade in the direction of the break. So what I would do is add some indicators and go through a process like that to make it easier for me to have confidence in what I'm looking at.
And by the way, just so we're clear, a lot of our viewers are day traders, they're retail traders. And so the concepts that Alex and I will be talking about, although we're looking at a daily chart, can of course be applied to an intraday chart.
Yeah, there's some fun intraday charts today. After this, we can go through some 5-minute charts and look at what's happening in the markets for sure. Any technical analysis, any good tool should be able to work across time frames, across asset classes. That's the beauty of technical analysis. So you might sort of eyeball the chart in the beginning and sort of see if you can indeed see that movement from bottom left to top right. But perhaps you'll throw on something that can automate that process for you. So you might want to look at Donchian channels. Tom, I'm sure you're familiar with the turtle trader story. And that's one of the things they used as their primary entries and exits, right? Looking for those breakout of new highs and new lows. And so something like Donchian channels can first identify those higher highs and higher lows for you. So instead of having to rely on sort of the subjective nature of our eyes, we can see that, again, here in the middle of the chart, in maybe mid-November, that's the first time we're making a new high using the Donchian channels. You can see that upper line moving higher. So now we're saying, okay, we're identifying a new high here using an indicator like the Donchian channels.
Right, Alex, just for those of you not unfamiliar, they're just the high and the low of the previous so many bars, right? So it could be
Donchian channels takes a look back period and says, is the price right now the high or low for the period? And if it is, let's move that bar up to whatever price that is. So that's why here you can see this large green bar up here. You can see how that's made the Donchian channel move because it's a new high for that 20 period look back.
Right, exactly. And the same on the bottom, they're lows, right? So it's the 20-day low, 20-day high. You can change those periods. I think turtles might have started with 65. I mean, really long. And of course, I'm sure the really smart turtles probably modified Jerry Parker, et cetera. They probably modified them to the market and their personal preference.
Absolutely. I think the textbook defaults are 20, but as you said, you can edit that. And I think the turtles use a combination of like a long-term 65 and then a shorter term, maybe a 20 as well. So, but just that idea of automating the process that you're trying to do with your eyes to give yourself that confidence, Donchian channels might be a good place to start. And then, of course, as well as I do, Tom, that everybody has a moving average on their chart, right? Like we don't even consider moving averages half the time. We don't even really think of them as technical analysis. We work for companies where to identify power users, we don't even count the moving average because everybody has one on their chart. If we're looking for, I remember talking to somebody who was like, no, I don't use technical analysis. I'm like, oh, what's that line on your chart? Is that a moving average?
Right.
Because everybody will want to know, and it becomes part of the news cycle. Things that you'll see on financial news. So when something is breaking a 200-day moving average, so prevalent in the industry that you're going to want to know where price is relative to an average of its historical prices. And if you think about that, that's inherently bullish. If you can say that the price right now is higher than the average of its past prices, that means the market's moved up and has now become higher than the average of its previous prices. So in something like that, looking again in this sort of section of the chart where we had that new Donchian channel, you can see the price moved above that moving average line a few bars before. It sort of struggled around that level. And then once it breaks above that average, we then see the Donchian channels. So we can start to stack these things up and say, price is trading above a moving average. Now we see a new Donchian channel high. Is this the start of a new trend? And this is sort of the process that you might then step through. But you can keep going, right? So this is, we've seen people with 15, 16, 17 different things that they're looking at, but you can keep going through a process, keeping it simple, but adding some indicators that give you some real value. If you look at another one that Tom is as well used as any in the industry is the Bollinger Bands. And Bollinger Bands, if you're familiar with these indicators, or if you remember your math classes from what feels like a million years ago, going through that with my daughter who's a freshman and trying to keep up with her maths is not easy as you get a little bit far removed from high school maths. But the idea that standard deviations will encompass about 95% of any data set, right? So that's the idea with standard deviations. Now, of course, that's a normally distributed data set. Financial data series aren't normally distributed. But if you think about it, 2 standard deviations around a mean should encapsulate a vast majority of the data set. So whenever price is moving up and outside or towards the edges of those standard deviation bands, then that's significant. That's important information for us to know because it's unusual. Maybe it's the beginning of something new. Maybe it's sort of renewed enthusiasm in the market that's pushed price quickly to an extreme, and that could indicate something happening quite quickly or new. So you can see here the Bollinger Bands now. We can see throughout this chart trading up to the bands, trading outside of the bands. All of these situations would be significant, and we want to know about them because it's unusual for price to be at the edge of those bands. And then let me just put a couple more on here, Tom, to give you an idea of what you might do if you're building this kind of checklist. We can put the MACD on here. Again, MACD is something that is incredibly well used. MACD, a lot of people really fall in love with this indicator because it sort of incorporates a little bit of trend, a little bit of momentum in that it's the difference now between 2 moving averages. So it oscillates. And that makes it pretty powerful because you can sort of see it going from lows to highs. And of course, MACD takes exponential moving averages. So they're a little different in themselves in that they respond to price movements a little bit more quickly than a simple moving average. But the MACD is something that takes the difference between 2 moving averages. We put a signal line on there so we can look at crosses. If you're familiar with moving average crosses, that kind of concept. But you can now start to say, okay, if my MACD is crossing above the signal, or if MACD is crossing into positive territory, also very, very sort of a bullish indication because it's saying that prices in the short term rising faster than prices in the longer term. And you can see how all of this is sort of happening in this November, December area of last year. We've got price moving above a moving average. We've got new Donchian channel highs. We've got MACD crossing above 0. We've got Bollinger Bands, price testing the upper bounds of the Bollinger Bands. And so we're starting to build a case for somewhere in here. We might say, yes, now we're identifying or we're recognizing a move in a new direction. In this case, we were in a downward move. And now we're sort of somewhere in here saying we're noticing a move in another direction.
Alex, before you go on real quick.
Yeah, of course.
What I like about MACD is there are really, to my mind, there's 3 ways you can interpret it. You mentioned a very standard and a very conservative way to interpret those lines, but I also look at the turns up and turns down of the histogram. It's a very aggressive and potentially, a little more risky way to identify those reverses, right? So Alex mentioned the cross above the signal line. That's kind of your standard. Yeah, it looks like the trend is changing. Let's go with the trend. You wait for the cross above 0 on the MACD. You're not going to get the lows. We know that. It's a little bit laggy, but It could be a case where, oh yeah, you know what? The trend is in place and I'm looking for the meat in the middle. You might have heard of that, right? We're not going to get the ends, we're going to get the meat in the middle. But really aggressive is that turn up right at the end of October with the price. MACD turned up, and again, very aggressive, but before it crosses zero, before the histogram crosses zero, it has to get towards zero. That's when the early start of the trend might be identified. Again, you run the risk of a little bit of whipsawing. And, as a trader, we want to have our stops in.
Absolutely. And like you said, that's sort of the first signal for somebody looking for a change, right? Or looking for a reason. If your thesis is bullish, that's maybe your first signal that, okay, here's a reason. We've got a little bit of a turn here. But like you said, very risky, because you see the one at the beginning of October then led to a rollover and price made a new low. So you've got to be, and again, trend identification in general is going to be a little bit of a lagging process, because you're waiting for a trend to be identified. But yeah, absolutely. So, but that adds to the complexity of things. If you're using your own subjectivity to sort of say, right, okay, there's different ways I can interpret this. When would I start to get confident of the MACD signals that I'm seeing? How confident am I here? Or do I wait for that cross of zero? Do I wait for the signal from the MACD crossing the signal line? And so you're right, absolutely. There's so many ways to interpret these things. And that leads to sometimes our sort of analysis paralysis. And then the only other one that I thought maybe I'll throw on for now is just volume, because a lot of people look at volume. You want to see relatively healthy volume on any kind of movement in price. That's sort of the old school approach. There's a debate about volume now with the different ways that volume is reported, but you'd be sort of slightly concerned if a move higher in price was accompanied by very, very sort of thin volume. You want to see if that volume is healthy. And so adding something like volume as that first non-price indicator that could confirm or not confirm what you're seeing in price is something that a lot of people might do. But let's stop here. That's sort of 4 or 5 things. And you know as well as I that you could have 4 or 5 more things on the price panel. We haven't even talked about, RS. We'll maybe talk about that next time. But RSI, all of the oscillators that you could add to the chart. And then what you end up doing is you have this, complicated chart where price gets very small. You're perhaps got some contradictory information on the chart, sometimes redundant information on the chart. But at the best case scenario, you're stacking this list of situations up to say that sometime in this November, end of October, November, December, into early new year, we can say we're confidently recommending some kind of trend. Now, the problem with this is it becomes quite complicated to read. It becomes quite subjective. How confident do you need to be? Do I need all of those things to line up to take my position? Do I say, oh, I'm okay when 3 of the 5 have been hit? How do I read this? If I'm a sell-side analyst trying to talk to a buy-side client, how can I explain it to them without complicating matters? How can a new person to technical analysis understand what they're looking at? So the idea of overwhelming and complicating the chart is something that we've dealt with in our work life over and over and over again. So perhaps what I can do now is show what we thought was the perhaps solution to this, which was to do all of this, but in the background, and just give that sense of trend by coloring the price bars. So if that's okay, Tom, I'll go ahead and change chart.
Let's see it. I mean, I know this is something we always helped clients struggle with, and we didn't have a solution, right? We had a solution that was, well, maybe we could change the colors here or there on this study. Maybe you want to reduce it, maybe hiding some of the studies, but we never had a way to kind of take it all in the background and serve it up like the way you have with your indicators here.
Yeah, I mean, thanks. And this is the same chart that we were looking at where we had that period of movement down. And then now we're seeing this change. And if you look, it's sort of that sort of second, third week of November here, where we are identifying for the first time then in a few months a new trend, and this would be a go trend. So just as a quick, if anybody hasn't seen the go, no go charts yet, we have 5 colors to paint the strength of the trend. And those are aqua and blue if we're in a go trend or an uptrend, and then purple and pink if we're in a no-go trend. Those are our no-go downward colors. And then, of course, these amber bars are the bars of uncertainty, often happening at transition between trends. We call those go fish. So we've got go, no-go, and go fish. Partly because that was a game that the kids played when they were younger, but also because Jesse Livermore once said there's a time to go long, time to go short, and a time to go fishing. So when the market doesn't give you what you need to be able to identify a trend clearly, we paint those bars amber. And you can see that here on this relief rally into the beginning of September. The market was uncertain here whether we were going to roll over again or whether we were going to go back to a go trend. And it painted a string of those go fish bars before ultimately making up its mind and sending us lower with the no-go trend. So you can see this is that area somewhere in here between November and December where we were starting to feel confident that we were identifying a trend in the upward direction. And you get that go trend here, and then it strengthens with the blue bars. And you can see now that's been in place ever since the end of sort of second half of November of last year.
And I like this because it allows you to maybe take some of those studies that we had on earlier that you really want to focus on. Maybe not all of them, that defeats the purpose. But if there was, maybe you did want to put on volume just to have that confirmation, or maybe you wanted to show the MACD because you wanted to fine tune an entry.
Absolutely.
You know, it condenses all of those items into.
Well, and that's the thing, Tom, like trading in the direction of the trend is really, like you said, that meet in the middle of the trend. If you can trade in the direction of the trend, you could use something like you just suggested, like a MACD, but perhaps you're taking MACD crosses only during the trend, right? So we're in a go trend, and now we're taking those reversals or that turning points of MACD to get us in perhaps at all of these trend lows, right? These lows within this go trend. Maybe you could use something like a MACD at the aggressive standpoint to get us in perhaps good entries throughout the trend. And like you said, any number of things. The other thing that we like to do a lot is use traditional technical analysis. So you can do, because there's nothing else really on the chart, we could do trend line analysis. We can look to increase positions when we bounce off trend lines. We can look at breakouts from prior areas of support or resistance. Like there's one right here on the chart that's sort of jumping off at me here. If I put oops, I just zoomed in. Sorry about that. But if you put the tracker on here, you can see, I'm just going to tell you where it is. But you see here, this area that was resistance in September, we congested here and we sort of consolidated in November, December before then breaking free. So you can put those market supply and demand levels on the chart because the price panel is still large. It hasn't been complicated with too many indicators. So that was the goal, and hopefully that this gives you a sense of trend without complicating your analysis.
Well, and I like the way with the coloring, it also gives you a little bit of an, I don't know, assistance on doing kind of a visual back testing, right? Of course, we're not analyzing the figures and numbers, but you can maybe, like you said, couple this with a MACD or an RSI or some other indicator, and you could say, okay, what happens when I have a full-on trend, and I mean the darker colors versus the lighter colors, which are kind of easing off the gas a little bit, maybe. Potentially there's a reversal up ahead, but maybe not. Maybe it's just a pause while the trend, gets a little more steam. So I like that with the visual.
Yeah, we've done a lot of work in that space too, because the goal was to incorporate the complete technical picture into the chart. Just things like what happens when you've had weaker aqua colors and then a return to a go bar, right? What happens then? Well, typically you get an aqua bar, you get a little bit of a run. If it returns to that stronger color, then it's usually a run after that period of weakness. It was important for us to build in this weakness because we wanted to see consolidations. We wanted to see those. Nothing moves in a straight line, right? Like we're not going to see a trend go up forever. We're going to see momentum wane. We're going to see price come back. And what happens when that aqua color sees a bright blue bar come back, right? Then typically we see a little bit of a run there. So that kind of idea of when in trend, how do you find ways to visually see what happened in those different situations?
Right. And I could see you coupling this with the volume histogram to see, are those pullbacks on increased volume or lessened volume, right?
Yeah, traditional technical analysis.
Right. There's a combination you might be looking for. Maybe we could take a look at a couple markets while we're, this is the E-mini. It's kind of the standard contract we look at. It's light volume today. Let's take a look at gold, if you don't mind.
Absolutely. Which contract?
Let's
GC,
let's do June. Let's move over to June, I think.
GC.
606, yeah. 0624-24.
Yep, so I'm just going to move our faces out of the way of the chart. So yeah, so here's gold. Gold's been exciting, Tom. We've been talking about gold. You're talking about that multi-year, over a decade-long neckline on a potential cup and handle that we've been looking at now for monthly closes to potentially break out of that, and that's what we had this last month, actually, the first monthly close, really significantly above all of those prior highs. And so you can see here with gold. It was sort of it was very difficult for people to trade gold for a long time. People were waiting for that breakout, kept failing, but now it does seem as if the go trend's in place. We've seen some strength again here. We see that little period of weakness and then a return to strength. The other thing that I like, Tom, about just not having anything else on the chart is that you can see, we talked about other kinds of forms of technical analysis. Well, candle patterns, right? This is a doji right now. If this stays the way it is, dojis mean something on their own, and there was a doji here at the bottom of this correction. So you can look at the chart as you would a bar chart, but also know that we are in a strong trend while you're looking at that kind of information.
Right. And for those who don't know, dojis are open and close are the same. There's really no advancement between buyers and sellers, although the wicks can tell you a lot as well. Also the placement and the trend. So at the top of an uptrend, a doji could mean just a pause in the trend. Looking at Alex's study, you're still in a dark blue, so it doesn't turn on a dime, right? The momentum just doesn't turn on a dime, but it also could be the beginning of something like an evening star pattern, which is a reversal, So these things matter when the trend is still good, right? The trend is still a go, and you're seeing a pause. It might mean that maybe it's more likely that that trend is still in place and we're just seeing some consolidation before it just gathers up that energy to go long again.
Yeah, and it's also important to know what things were designed for, right? Like candle patterns are relatively short-term patterns. So a evening star pattern in the middle of a go trend may well be a pullback, right, within the go trend. But if you're looking at the trend on a daily basis, and we're still in, that might be a place to lighten positions, or it might be a place to look for then the pullback to see where that pullback stops. Do we then get back in? So just making sure that you have a good sense of what things were designed for, as well as you're using them all together, makes it really powerful.
Yep. Maybe we could take a look at crude. Crude is having a little bit, not quite as major as gold. Things are really long term with gold, but crude is having an area, and you might type in you can go to, I think if you just type in at the top CL. And that first one right there. Yep. So crude is getting a little bit of a breakout as well, of a range that hasn't been around for very long. But
yeah, and if you look at this on again, another new high being painted right on the daily chart. On the weekly chart, it was in a sort of a move down, and we're seeing just the first 2 or 3 weeks of a new go trend on the weekly chart as well. So that multi-time frame analysis sort of idea is what, having that larger bias, depending, like you said, who you are and what you do. This may be your larger time frame. You may step down to then look for entries and exits within that time frame. But just knowing that in the larger picture, we're getting a new go trend on the weekly chart as well. Maybe gives a bit more power to what we're seeing on the daily chart on oil.
Great. You see, you had some other markets in there. If we could if you go to
symbol finder. We've looked at the Russell before. We could look at the E-mini on an intraday chart.
Let's take a quick look at the Russell, and then we'll switch over to the E-mini intraday. So Russell looking a little different today.
Yeah. Similar idea. The Russell was much more choppy for us back in sort of February, and we saw that little period of counter trend, sort of uncertainty leading to actually a couple of bars of a no-go. But again, we're both obviously big believers in technical analysis. That's where sort of our careers have been spent. And technical analysis, one of the things that I love about it is it tells you when you're wrong as well, right? So you don't have to say, oh, this works all the time, right? Like you got a no-go here, but 3 bars later, it became a go again. So you're now you're being told by the chart that this no-go has been, it didn't work. It didn't go where it was, where perhaps we thought it would. Now the trend conditions are identifying a go trend. And then this one has stuck for longer. But just technical analysis in general, I think somebody said you've got to be disciplined enough to follow your rules, but also be able to break from them when the market tells you that you need to.
Right. Here, what's interesting too, I see this pattern at the top. It's a bullish engulfing, similar to about 2 weeks ago, 3 weeks ago. So possible retracement in play. Alex, we've run up against time. It's, I could go on and on. If we didn't have a clock, I probably would. So thanks for coming back. And where can people find you?
Yeah, gonogocharts.com, or send us an email, info@gonogocharts.com, and that'd be great.
Well, appreciate you coming back on. We'll do this again next week.
Yes, sir.
Up next, thank you for coming. Up next, we'll have Mike Burke, myself, to give the midday wrap up. Stay tuned. We'll be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Good morning, good afternoon, everybody, and welcome to our midday wrap-up. I'm Michael Burke. I'm joined by Tom Snyder, CMT. Thanks for being with me here today, Tom.
Mike, good to see you. Thanks for having me on. I hope you had a great weekend, a great Easter weekend.
I did. I visited friends on the west coast of Florida. The weather was fantastic. Some good food. Yeah, I had a great Easter. How about you?
That's great. Yeah, we had a great Easter. It was just the three of us. We went to a castle. Like I said, we found the only castle on Long Island and had a nice lunch there. It was great.
I grew up in California, and so in California, the Hearst Castle is a fantastic venue. It's on a hill overlooking the ocean, just so decadent, so just incredible.
Sounds like a plan.
All right, so Tom, before we get started, I just want to talk a little bit about the contest we're having this week. It's Guess the Close. Viewers can win a great Ninjatrader swag package just by guessing the settlement close for the Thursday settlement price of the S&P 500 June contract.
Right, and that is open to anyone in the United States for the swag package, but we recommend sending an email to learn@ninjatrader.com. Just please put guess the close in the subject line, and you can even put your guess in the subject line if you'd like. One entry per person, and you need to get them in by tomorrow night, midnight Pacific time. That's 3 a.m. Eastern time for it to be counted.
Maybe take a quick screenshot right now so you get all that information. Maybe you want to wait till tomorrow to put in your entry, but we'll be talking about this tomorrow as well.
Yes.
So Tom, all the major markets are down today, and many of them are below some key levels. This is the daily ES. I'm just gonna kind of scrunch this out a little bit more. So we're below 5,300, down 17 points today. In fact, all the major markets are down a little bit.
Yeah, now when we started the opening range, before the opening range, this was a doji up there. It looked like not really much happening. Low volume day, not a lot of huge news that we suspected, but I think we were proven wrong with some of the manufacturing numbers that came out at 9:45 and 10 a.m. That seems to be about when the reversal happened from being a doji to being in the red.
Yeah, so is this another one of those good news is bad news kind of days?
It seems like it. It seems due because the manufacturing numbers were, for the most part, most of them were better than forecast, and in a positive expansion type of territory rather than a contraction territory, which is good for the economy.
It's interesting, there is so much chatter about the Baltimore Bridge and the loss of economic revenue, wages, that kind of thing. It's a small part of the U.S. economy, but it's sucking up a lot of the oxygen in the room, and I think that could put a bit of a negative tone on the markets as well.
And I think sometimes when that happens, when you have light volume, it kind of gets a little bit more amplified than it should.
Yeah, I totally agree. The other thing is we're still kind of in that spring break Easter doldrums. So this week, we could see again continued lower volume and lower volatility, and then maybe that'll start to change a little bit toward the end of this week or next week.
I don't think my son would say he's in doldrums. He's not in school, so he's having the time of his life. But I agree. I agree.
So 5,300 is that level in my mind. If we can get back above that, I think that'll be positive for tomorrow. If not, I think we could see some more sideways or negative action.
Yeah, I agree. That 5,300 level is a psychological level, and closing above it would be a big victory, I think, for today.
Yeah, I mean we've been here. I haven't drawn a line there, but just to kind of look at that real quick. We're right at that line. So I mean, we've been there for 6 or 7 sessions now. Only one session really closed above it. Actually, yes, Friday we closed above it too. That doji, it's kind of hard to see there, but we actually closed above it. But again, that's a level that the prices are attracted to right now, and we're probably stuck there for a while. This is NASDAQ. So here in the NASDAQ, I'm going to draw a line here at 18.5. So that seems to be the number now. This number has actually been a pretty good magnet. Even back in early March, we got up there, couldn't quite get through it, Then finally last week, we were up there for a couple of days, back under it. We haven't really closed above it. That is really a strong resistance level. Prices are just consolidating right on that 18.5 number.
Yeah, and if it continues to hold as resistance, I mean, you have a nice support area with the moving average. I'm not sure. Is that a 21-day moving average?
I use a 21. Yeah, I use a 21.
Yeah, that 21-day has held pretty nicely as support through this uptrend. So even though we might not hit our resistance level, we might not be able to get above 18.5. It's not something that is the end all be all if we don't cross above it, because we do have this supportive trend line coming in. So, eventually, I would imagine those two will come into conflict at some point, and one will have to give.
Yeah, I totally agree. Real quick, let's take a look at Russell. Russell's actually struggling a little bit here. I'm going to go to the 5-minute on the Russell before we take a look at the daily. But here again, this is what you were talking about. Some of the news came in and we saw this sell-off. It went right through the pivot point, right through the previous close, all the way down to to yesterday's low, where S1 is pretty close to that yesterday's close. but the market went through it. So now those levels become resistance. They should have been support, but that didn't happen, right? And it went through it. Now they're resistance. You can see it bumped against the yesterday's low about 40 minutes ago. I'm using 5-minute bars versus the 10-minute bars that you usually use, Tom. But we can see that previous low is so often a key level during the day.
It is, and that's why I like, having those levels on the intraday chart. You know, the S1 lining up near the previous low, coincidental, right? I mean, there is some math
Completely.
involved that keeps, but it's just, kind of coincidental. And you would think, okay, those two areas might be support. And when they fail like this, I think that's a big deal. When they fail and become that resistance, now it's just one more point you have to overcome. You could look at it that way, but we started well above R1. Well, somewhat above R1, right? So we had to come through the pivot, come through S1. And, this is where I'd be, looking for, where is S2? S2 is probably, 2120 or somewhere around there. Lower than that. Yeah, even lower, maybe 2110. And, this could just be a grind down today, failing those resistance levels being overcome.
Yeah, I mean, I'm a little more pessimistic than that. I mean, the buyers never came to the rescue here, really. I mean, there was a couple little pullbacks, but nothing really significant. And now, one of the things that I look at sometimes is when we have that point of control based on where the market is now. I go back and look, where was the previous point of control? It's just a little bit above that. So there was a lot of volume, coming in at that area, but even more volume over the last hour or so coming in, moving that point of control down. So if, a lot of times I look to see whether the point of control is moving up or moving down during the day. And you can look left and see where these spikes are, where we are now and where it was. And so, it's one of those indications of commitment to a particular price level. And I think that's why that volume at price is so useful.
And we're building a competing one right now. The longer we stay down here and trades occur at this level, that lower point of control could overcome the previous one, making your point, Mike, which is the point of control moving up or down throughout the day?
Yes, exactly. What else should we look at today? Craig was talking about the bonds, the 10-year bond in particular today. That's not having a good day today. It's down 0.75%. Let's take a look at that. So this market, early on, even before the news was really in decline, we were below the previous close. Went right. Look at the tight trading range there on Friday, Tom, from that blue arrowed line to the low. That's a pretty narrow trading range on Thursday, not Friday, by the way. Friday was dark, but today we've already moved almost double that trading range on Thursday. So I guess we could say that everyone was kind of anticipating Thursday was a light day, anticipating the long weekend. So yeah, that makes sense. But what's concerning here is this market moved, all the way through in just a couple of hours, all the way down to S3, and we're below S3 now.
Yeah, and this is one of those cases, Mike, I think you could see it really well on your chart, which is how do I know that the close on Thursday was halfway between the high and the low? Well, the pivots are lining up with those values, right? So if you look at R1, it's right at Friday's high. You look at the pivot, it's right at the close or Thursday's close, and S1 is at the low of Thursday's pricing. So, that to me is like, well, that's almost perfect, right? And perfect, just that all that means is the close on Thursday was halfway between the high and the low. It's right in the middle.
And the other thing that means is that the distance between the pivot point and R1 is very similar to the pivot point and S1.
Exactly.
So basically the math just kind of makes it all very symmetrical.
Right. And so now we get to okay, that'd be nice if it were kind of a nothing, no news day, but that didn't happen today, right? And you mentioned S3 and continuing, that's a pretty big move to go from R1 to S3 and with very light news. It's very surprising to me.
I agree. So in my mind, they're 110. That's that. If we go to the daily chart, you can kind of see what I mean by that. So there's 110 on the daily chart. That was kind of where the swing, the swing low kind of changed in March, right there, right at that 110 level. The 126 moving average was right there as well. So you had a couple of strong levels there. We bounced off of that. And again, that Ichimoku cloud became the nemesis here of the 10-year. We got into that cloud that was acting as strong resistance, and it could just never get through there. That's right around the 111 level. So, this is moving between 110 and 111. And today we have this benchmark down candle on the daily chart. What happens after this? If we close below that 110 level, like we did back in March on such a big candle, I have to feel like that's indicating some follow through this week.
Oh yeah. Yeah. And the question to me is, where does it go? And one thing you could use is a kind of a variation of the Fibonacci extension, or Fibonacci extension marks out the move. There's also ABCD pattern that you can use. But basically, I'm looking at the previous, downtrend, right? To that level, to that 111 level. If you were to take that same move and extend it to, let's say, the top of the current bar, or maybe Thursday's bar, you're looking at a target of about 108.16 on the downside as a possible area of support. Doesn't really have anything to do with, you'd have to look left to see where that go if it lines up, but this is more based on just the previous downtrend being applied to the current downtrend.
So right there, I'm going to draw a line right there. That's 109 and a half, 16, 30 seconds roughly, right? And then you're saying we could be down as much as another point from there.
Exactly. If this kind of wave motion down that we've been seeing, we have a move down, a little bit of a retracement, then the next move down is about the same amount as that previous move down. A little bit of a retracement, rally. The previous move down didn't really extend too much, but if we do see that same kind of move, 108.5 is kind of the target area.
So again, we're talking 108 and a half.
I'm sorry, 108.16. Sorry.
And this trades in 30 seconds, so 16, 30 seconds. So you just have to kind of do have to get to the lowest common denominator there. That wasn't my strength in 8th grade, but I can figure it out. But yeah, this market today, pretty significant. This is bumped the 10-year yield futures over 4.3%. So at 4.32%, that's a pretty sizable move. I mean, and again, the Fed is not going to be lowering rates in May. And then even June is not a for sure thing. And, I don't know what you think, but it's possible based on everything that's going on that they may not lower then either.
Yeah, I right now it's running about 60% probability they will in June. But as we've seen, as we get closer to let's say the May meeting, and if the May, we probably won't cut. It just seems to me that reluctance to cut may influence the probability to a no cut level, or less of a 60, right now 60 may drop down to 55, 50. And, then, okay, now we got to look at the data a little more seriously. So I'm not sold, but it is still early. It's really early.
There's that phenomenon, the longer you don't do something, the harder it is to do it again.
Right.
And
right.
So, I'm sure that's a little bit in play here. Let's take a look at gold. Gold gapped up over the weekend. Got all the way above 2280. That's an all-time futures high for the gold futures right there. We are certainly going to close at an all-time high close for the futures today. unless this market, gets back under 2240. So this market is incredibly strong. You see a lot of big sellers wicks on these candles. You guys call them Mohawk wicks. But the thing is that the buyers get exuberant and then sellers knock them right back into reality, and then that happened today.
Yeah, I'm looking at the previous trend, Mike, the big move away from 2000 or 2050, whatever you want to call it. We had a series of about a week of green candles. And what's missing are those big sellers wicks. I mean, that to me was real big participation. And now we do have some of those seller wicks. So, this rally that we're seeing might be a little more tempered than what we saw from the bounce off of 2000 or 2050, if you want.
Yeah, I mean, the dynamics here are hard to really, get your head around of why is this happening now. I think there was an episode with Blue where he was talking, Blue Putnam of the CME, used to be the chief economist for the CME. He was talking about that maybe central banks are buying in here. And of course, they are the elephant in the room. If they're buying, there isn't any amount of hedging that is going to stop the market from moving up if central banks are buying. And so I think maybe what you're seeing here is, they get done buying for the day, and maybe there's some hedging coming in that brings it down. But this market is going to continue to go up if in fact that is true, that central banks are buying here.
It's like the biggest current in the river, or whatever you want to say. You can't go against it too much, but when that current stops, maybe you can adjust, right? You can trim.
And again, we talked about this in the major market indexes. We don't want to try to pick a top here, right? If this market is telling us it wants to go higher, we should be on board. We're not gonna come in here and say, okay, this far and no further. I mean, that's just doesn't make any sense,
right?
On this market. I mean, I guess the next level that I would think there may be a pause is that 2300 level. But again, how do we know that? Because it's never been up here before. It's
right.
You could have another run like you had in late February, that 5 or 6 big candles in a row, and who knows where that would take us. It's just you don't want to be the trader who says I went short at 2300 and then it goes to 3000.
Sure.
So not that I think it's going to go to 3000. I just want to be clear on that. Crude oil is up again today. We're getting into some higher territory where we haven't been for quite a while since the fall of last year. We're above 84, 2 really good days in a row for crude oil. We haven't been above 84 since November of last year. This market has just been steadily in an uptrend, really all the way back to if you really look where this started, it really started back in December.
Now, question for you, Mike, because you have Bollinger Bands on your screen.
Keltner channels.
Those are Keltners. Oh, my mistake.
That's an 8-bar Keltner.
Okay, so let's talk about that, because when we talk about bands, we're talking about volatility for the most part, and in some cases, when the market is consolidating, a break above a band could mean a trend, right? When we're talking about a prolonged trend or expanding bands, break above the band might be mean reversion, right? It can't stay extended that long. It's going to come back into the bands. Where do you see that? What do you think about current price being above the band now? Do you think it's more mean reversion? We might expect a little bit of a retracement, or do you think this market has been somewhat relatively small, low volatility, and it's getting a little bit of a bid now?
So it's interesting. If you look in the lower part of this chart, I have the ATR, average true range, 8-bar ATR, which is the same length that I'm using for Keltner. So all that means is the distance between the two Keltner bands, the upper band and lower band, is a factor of that indicator on the bottom. The distance is getting smaller and smaller and smaller over time. And so that volatility is decreasing. But what we see here is that, yes, we go up and we test that 8-bar Keltner, and then it moves back into the middle. But then the next test of the Keltner is higher. And so it kind of confirms the fact that we are in an uptrend. It keeps making new highs, but it doesn't stay. Those little spurts of higher highs in the Keltner just simply is a confirmation that we are in that uptrend. But yes, I expect this to revert to the mean here, before we get back to 85, before we get up to 85. So I think 85 is kind of another key level here for this market. Haven't been above 85 since November. Every time we come up to that Keltner, we revert back into the middle. So yeah, I think, at this point, I'm looking for, again, I'm not going to, the market has to prove it to me. I'm not going to just put in a limit order that I think it's going to turn at this point. But I do think that this market is going to come back into that, inside that Keltner and revert closer to the mean again.
Excellent. Yeah. Yeah. That's interesting. You said you're not going to pick a high right here, but maybe we wait till the end of the day today and say, okay, tomorrow probability might be a little higher that we see a little bit of a reversal, but anything can happen.
Yeah. I mean, my bias here is down once we get back inside the Keltner. We just don't know when that's going to happen.
Exactly. Well, I hope so for our personal reasons, right, Mike?
Yes, of course. Crude oil is one of those things that just affects everyone's lives. It affects inflation. If we want the Fed to start lowering interest rates, inflation has to come down, and things like something as important as crude oil, this has to come down to a regular price. I don't know about you, but over the weekend, prices were pretty high for gasoline.
Yeah. We saw that here too.
So, all right. So Tom, I think we're just about out of time here. Tomorrow, Jim Cagnina will be with Blue Putnam again. That's always an interesting conversation. And then you have Anthony Drager. Last week, he started an interesting conversation about the dynamics, the price dynamics and trader dynamics of support and resistance level. Is that something you're going to continue on with tomorrow?
Right. We're going to continue on. It's kind of the second part of, I think, 3 parts he had envisioned. So we'll continue the discussion on support and resistance. He's some great insights. I can't wait.
So don't forget to put in your entry for Guess the Close at learn@ninjatrader.com. I will be back with special guest Stan Ehrlich for bars closing at 3:15. Hope you can join us. Otherwise, we'll see you tomorrow. Good luck in your trading today, and have a great afternoon. Thanks, everybody. Thanks, Tom, for joining me.
Thanks, Mike. My pleasure.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.